please. Not hearing. No.
Good afternoon, everybody. I did not update the shareholder count, the number of shares. I'll do it, but I forgot to. So we're still at 16,100,000. We're higher than this now. And if I could suggest to you, today is the day to be aggressive on buying shares of Railtown. I know that the boy who cried wolf, the clock who's broken, you can give all of the negatives, but we know the situation with Railtown. We don't want to accept it, but we know it. The company probably on, and I'm not going to say any negatives. It's a new generation, and the way things are going in Canada is just terrific. The attorneys and the bureaucrats, they're all great. I have nothing to say. But the fact is, the AIP deal took forever, and it probably should have been completed in the second quarter of this year. I'm not pointing out anything. I'm not going to get in that trap again as to why it may have been delayed. I know one safe thing I can point out. Because it's in our modern culture, it's okay it's safe ground. The guy running AIP he's probably younger than I am, but he's an elderly white guy. That's safe to point out. And he's a professor. I'm sure he's smart as a whip. I'm sure he's good at navigating the promotions and teaching and publishing and all the power structures of academia. But I'll put it on him. That way I don't have to hurt anybody's feelings. It's clear to me that a professor has never run a public company and has never handled the balances between legal and regulators and timing and making sure things are actually filed. And if your secretary can't do it yourself, and that time matters. All of that. So I'll blame him. But we don't have to blame anybody. We just know that the AIP deal took 10 months. We know that. We know it. We also know that because we've learned it through 2 or 3 dozen stocks, we know that the North American markets are rife with computerized short selling, program selling, algorithmic selling of shares which do not exist. We know that. We know that. I've tried to make the distinction to you that sometimes companies like Finger Motion enter into a deal with a bird dog, a front man, like the dastardly Jeff Easton, but that document that they signed saying, I've got my funding, it immediately goes to the hedge funds who start shorting. And then there's a campaign because the funds can put their weight of everything behind the selling and they can steal the entire market cap. Well, in the case of Finger Motion, a whale bought out the note against the wishes and objection, and in the face of the objections of Lynn Partners, paid $10 a share. In any other business, that would be called a sucker. But it also could be somebody that was trying to do the right thing. So Finger lived another day. But what happened with MMAT? Their board wouldn't listen to the fact that short selling goes on. Their attorneys, their board members listen to the lying so-called financiers, and the stock gets destroyed. What happens with HPIL? They go to Mark Bazile. Hey, he's going to fight, and he settles, and the Kramers stay out of jail. The CEO at least can exist for the next period of time, but shareholders are wiped out, and Mark gets paid. The attorneys see this as a source of massive revenue, and hedge funds see it as a way through designated parties as a way of juicing their returns. It's facilitated by 2 guys, Vanu and Citadel. You know all this, but you don't accept it. You look at the stock price and you say, oh my God, it's telling me something. It's telling me that management has to do something. Something's wrong with the Railtown. They all get destroyed in the machinery of this crime. But the difference with Railtown, they don't have board members listening to Jeff Easton. They don't have lying attorneys coming in and telling them, you better take the deal from Yorkville. They don't have that. They haven't done a toxic financing. There is no hedge fund that is trying to destroy Railtown. So what's going on? Well, there's 2 other kinds of short sellers. The day traders, so-called, and the somewhat longer time frame. Just short-term opportunistic short selling. Well, why do they sell? Well, they know that when retail buys 16 million shares of stock, they run out of money. So they just keep pressing. They may bribe, it doesn't even have to be bribes. They may have their own attorneys that make phone calls or shills, I guess you call them, that make phone calls into the regulators. Have you looked into that AIP deal? And they slow it all down. We don't know. My suspicion is that the AIP deal, I'm not going to go further. I'm just going to blame one guy. It's safe to blame him. It's safe. Our culture allows that. Anybody else you bring up? Oh my God, I can't believe he said that. I had to listen through that. So I won't bring up anything else. What's going on in Railtown stock, Canada and in the United States, is these computers are set up to sell stock they don't own, violating securities laws, but somewhere along the way, a complicit law firm attorney signed some documents with the prime broker saying, hey, they're good to go. And somewhere a hedge fund put up enough assets at a prime brokerage or in an LLC. Hey, this is a great client. And it's all for the transactions. It's all for the transactions. It's for the fees. It's for the stock loan. You know all this. But you go, oh my gosh, it's down. Oh, I knew it. I knew there was something wrong. I just knew it. Technology goes at such a rapid rate. I just knew it. I talked to one of the guys down in Puerto Rico, and he said that the AIP guys are great, but these Railtown guys can't do anything, and that guy must know. So I'm just beside myself. I think it's exactly back-assward. I think it's the AIP CEO didn't know what the hell he's doing. I'm sure he's a good lecturer. I'm sure he's got a good knee wall, but he doesn't know how to run a public company. And it's good now. He doesn't have to. I'm not saying he's not smart, not bright, doesn't have a great business plan. But I think that's where the inability to get the deal done was, not with Railtown. But hey, I heard it. Somebody said it to me, so I'm worried, and that guy has a lot of money. The other thing you're worried about, you're worried that the stock price is telling you that Railtown can't get anything done. Well, is it really their fault? If you have a bumbling AIP leader that can't get paperwork through his own law firm, great law firm, great. Oh my gosh. Well-trained, best, a whole new generation of leadership. The future is leadership. Couldn't be better, couldn't be more satisfied with that law firm. So it's just this one guy. But what do? Hop a plane? Say, look, we're not going to merge? How do you know that didn't happen? But guess what? It's over with now. It's over with. AIP is purchased under budget. Yeah, but why is the stock not up? Because these short-term day traders and swing trading shorts, they just press it in the direction of the least resistance. While all of us go, oh my God, it's down. I knew it. William doesn't know what he's talking about. That guy's such an asshole. He's just another one. It's just like GTII. They know that goes through your mind, so they just keep pressing. You're not going to buy against them. And even if you did, it might not change much. This is systemic theft. Wall Street looks the other way. Bay Street looks the other way because it's commission. Congress looks the other way because Goldman Sachs gives them money. Presidential candidates are bribed by Goldman Sachs. It's not hard to understand, but we look at the stock and we go, oh my God. All of a sudden, we become day traders. How's it worked out? G-Bucks was going to go to 150. It's 8 cents. Finger is going to go to 3,000. It's $1.41. Quantum at $27 was going to go multiples higher. It's at $10. Well, no, that was Mountain. MTEN was $27. It's now $1. Quantum, I don't remember how high it was, but it's $10 now. What's GDC doing? We've missed out on all these other opportunities. We could have been making money elsewhere. I remember one gentleman here bought 6,000 shares of GDC at $7 because it's, according to the press release and his viewpoint, it was worth $22 approximately. Well, it's $3.77 now. You know, oddly, he could probably sell that and buy as many shares of Railtown now as he could have bought at $7. He could buy at $3.70 by selling it. 6,000 shares, the same amount of Railtown now. But people don't like to take losses. So he'll hang on probably for GDC to go to $20 or higher in a squeeze. But no one ever learns. Retail is the sucker at the table. The shorts know what they're doing. The longs pretty much know, not the CEOs, not the boardrooms. But the longs, the computerized longs, the trading desks, the charm boys, they know. The goal is to get it up so they can sell their stock. And I'm not picking on the one guy you're thinking of the other two. They sell the stock they've been granted. And hey, they helped out a CEO. They lived the life of Riley. And they tell you to do your due diligence. Well, that same kind of selling, that short-term selling, is going on in Railtown. Why? Because they've taken the stock, frankly, from 68 cents to 28 cents over the course of 5 months. Yeah, Corey should have done something. Well, what's he to do? And I know I can't point out anything about regulators or attorneys in Canada. So I'm just going to stick with the hapless CEO of AIP, a professor. What's he going to do when a professor meanders around the process of getting a deal done? He's never had to do it in his life. I don't know the answer to that. But Corey finally did get it done. And of course, the regulators are great. They're just great. They're just great. Can't make any criticisms. But what do you do when a bureaucracy or a regulator is slow? Do you go have a hissy fit? Do you send a legion of attorneys in to sue? Do you call the press? Do you prematurely announce news because you're going to show them? What do you do when a bureaucrat decides to dig in him/her heels, his/her heels? What do you do? What is your choice? We already know the new generation of bureaucrats and the new organization is better. We already know that. So you can't really criticize them. But what do you do to speed them up? Do you make sure every form is correct? Do you put it on bonded paper? Do you send apples and wine? Or is that bribing? And that's against the law. What do you do when a regulator takes his or her sweet time? Well, I don't know what you should do, but it's Corey's fault. Should have done something. I don't know, guys. AIP took forever. It's over now. But you know what? It opened up a prolonged period of time, depending on how you want to count it, 7 months, 10 months, 11 months, where the company just couldn't say anything of import. And probably certainly every large investor that knows the story, substantial investor, knowledgeable investor in Canada, can't buy the stock. So there's no buyers. You and me, we're finished buying. What a perfect setup. You don't need the toxic note. You don't need a hedge fund. You just have to be opportunistic every day. Have you noticed every day? You don't notice. Every day there's 52,500 shares for sale. Every single bloody day. The offer is 52,500. Right now it's 48,500. 42,500, 20,500. They want you to think the whole world is selling the stock, but you know what's going on. You don't realize that gives you power? That gives you power. All that pain you went through with GTI, Vocal, CRTD, MMTLP, GME, AMC, Data Logic, MULN, MMAT, COSM, G-Bucks, all that pain. You didn't learn anything? You didn't learn that this is a systemic attack on North American markets? You didn't learn that. You didn't learn to check to see if there's a toxic financing in place. There isn't one in the case of Railtown. But the pattern of selling with the automatic computers continues, and their goal is short term. Now it's lasted. I'm going to blame the one guy I can blame without pissing anybody in the audience off. The whole world, you can't say. The one guy, the CEO of AIP, took forever to get his shite in order, but it's done now. Well, why wasn't Corey on top of his ass? Well, how do you know he wasn't? How do you know he wasn't? But that's finally that pressure, 5, 6, 7, how many ever months? 7 months of that limbo is over. But you know what? During those 7 months, 8 months, 9 months, 10 months, Corey was doing what he needed to do to build out Railtown. How do we know that? Well, I guess the fact that he attended conferences, updates us on LinkedIn, put out a investor update that has a lot of information in it. That he's has sat, however the word is, for a couple of interviews. We could assume that he's just goofing off, ineffective leader, or according to the latest filing, both Corey and Marwan Haddad own about 40 million shares of Railtown. Maybe we can, instead of immediately going to panic mode, figure out that Corey's been hustling his butt off and doing everything he can do to make Railtown successful. Because if it goes to $10, if it goes to $15, he's worth $250 million. Maybe we can just go ahead and assume a guy that built companies before and sold one, or was part of a company that was sold to Microsoft, and he's been in the software space for 30 years, and he sat with Marwan Haddad 6 years ago and came up with the idea of this software fix and solution of a real problem. Maybe we can assume he's been working behind the curtain. Why is the curtain still there? Because he's the only guy I can blame. If I blame anybody else, I'm going to piss people off because it's so unfair. So because the CEO at AIP couldn't get his paperwork organized. I'm sure that took 3, 4, 5 months longer than it needed to. But hey, that's life. That's just life. It's dealing with human beings. So Corey's been working all this time. I believe, you may not share that, but somebody out there told me I can't use the term quiet period. It's an inappropriate use of the term. So I think we can assume that everybody associated with this deal signed a confidentiality agreement or a non-disclosure agreement or a non-compete or all three. Maybe there was wording in what they signed said you're not going to trade this stock. And then others, by law, by regulation, are not allowed to trade if they have material information. Well, they closed the deal. Why aren't they buying? Where's the buying? If it were so good, someone would be buying, whispers would be getting around, and people would be, really? Really? Would John Ruffalo risk his franchise to get a head start? Would Canaccord Genuity risk their license to get a head start? Really? I suppose. It used to happen in the States. I don't see it happen that much anymore. Not down at these prices. If you have a charm boy pushing for it, sometimes things run up. If you have Roaring Kitty come out with a broken arm and grunt at you, the stock goes up because he's a genius. We know the answer. Whatever hard work the company is doing, whatever customers they have lined up, whatever revenue is in the docket, they can't talk about it. Why? They got the AIP deal done. Yes, they did. But do you imagine that anything occurred over the last 7 months that is material? Do you imagine that there are contracts or agreements or revenues, perhaps predicted revenues, that are material, and that a bunch of insiders and bankers and investors might know of those details or be presumed to know of them, so they can't buy? They can't buy. Well, why hasn't Corey released news? Well, I think he has released quite a bit of kind of puff pieces, but he's touched us probably twice a month. I don't know. I didn't look it up before I went. And last month he gave us this. But he has to follow the regulations. He has to follow the law. The criminals don't have to follow the law. They don't have to. They own the law. But if you're long, you got to follow it. So why isn't he announcing anything? Well, I would revert back without making any judgment on who's handling it. News has to go through attorneys. News has to go through, if there's a company on the other side, for example, TELUS. Has to go through their layers of approval. All excellent. The world has changed for the better. The new generation. It's amazing. It's amazingly effective, fair, and in return for that, things go more slowly. But we decided as a society that it was the way to go. So, but then we don't want to live with the fact that regulators take forever. Attorneys are not, well, I'm not going to make any statements. So for Corey to get news released, he's got to go through the channels, whether it's attorneys, regulators, board approval, and other companies' approvals. And in that same time frame, he's getting ready for the annual meeting next week. And in that same time frame, he has to have filings made to the CSE and to CEDAR. And according to someone here, I think it was Lavender, they have 3 workstations, which I think is great. The company does not run with a lot of overhead. Therefore, they're not in the trap of Lynn Partners, Yorkville, or Geneva Roth Holdings, or someone like that. The other side is they got 3 workstations to handle development of software, to handle contracts, to handle all the regulatory filings, to handle everything, to handle earnings. Well, we want answers now. Do you ever stop and wonder if we deserve that? When a company is building a story, is the CEO's responsibility to the short-term share price or the long-term business plan that gives long-term shareholder value? And by long-term, he's been in this deal 5-6 years. This isn't a flash in the pan. So we wait. What, for example, could be material news that we're waiting for? Well, it's right here. It's right here. Shared compute revenue. Right here. Tell us. Do you know what that deal is? Do you know the arrangement? No, I don't either. Is the press release that was put out about a month ago noticing the TELUS alignment, was that enough to release individuals and organizations who signed NDAs, CAs, non-competes, standstill agreements, whatever the hell? Was that enough to release them from their obligation not to buy? Would the regulators assume that? Would a future class action lawsuit assume that? I don't think so. So yes, the AIP deal is finished, but there's more to come that's material. Luckily for us, the company has been working diligently for the last 7 to 10 months, and there are material pieces of news that need to be released before the buying can come in and before research can go out. I mean, I suppose research can go out, but just not mention those items. So research could come out sooner. But the buyers have to be very careful. The sellers, they can break the law. You know that. It's not new. It's not new. And then you say, when's Corey going to do something? Or Canaccord Genuity, let's call them up, they're shorting. You also know that nobody knows. You know more about shorting than the CEO knows. You know more about shorting than anybody at Canaccord knows. I mean, there's probably 5 people at Canaccord who kind of understand it. It's a profit center. But most brokers, most Wall Street professionals, they still think things are run the way it used to be. Look at him. He still thinks that buy-ins come in. I mean, he thinks I'm wrong. I mean, you got to pick your opinion, but the stock now is 29 cents by 30 cents, 0.3009. The volume is 82,750. And guess what? This morning, to my memory, approximately 7,000 shares came out of the gate on the bid. That's manipulation. It's possible. It's possible somebody decided to sell. And then 100 shares came, and then 100 shares about 45 minutes later. And that's all that showed on my screen. But the volume was 24,000. Did they do it off in a dark pool? Probably. You know that. I would guess the real selling today out of 82,000 shares is pretty minimal. Pretty minimal. But you know what? We can stare at our navel. We can play with our sore tooth. We can ruminate and go over and over and over it. Or we can just say, you know what? The last 3 years was an expensive education, and we can't fight it. We are unable to fight a group of men who have no morals, and all their goal is money. But we can use that knowledge to our advantage, and we've noticed multiples in AI 2.0. We've noticed multiples in software development 2.0. We've noticed the gigantic amount of money being spent on data centers. We notice the quantum leap in computing power of the NVIDIA chips. We notice entire countries devoting all of their energy to so-called sovereign AI, from Canada to South Korea. The United States hasn't said so, but it's pretty sovereign, and it's in a race with China to win in AI. We don't notice that. We just notice the stock's down half a penny now. It was down 3 cents. That's all we notice. We completely lose our understanding that not only hundreds of billions of dollars, trillions of dollars are being spent on this so-called technological revolution. I mean, we can have our opinions that maybe it isn't so much of a revolution. I don't know. They're going to take the paper dollar away. Everything's going to be electric. When you go to the airport, you use your phone to scan. I don't know. Are we going to go backwards? Every one of you collect pictures in your phones, store it in the cloud. Are you going to get rid of all that? Countries build drones to attack each other, and it needs computing power. Are we going to go back to machine guns and troops? I don't know. I guess that's what you figure when you see the stock down 3 cents. You forget that the shorts just keep the pressure on, but their goal is very short term. They've made a lot of money in the last 6 months. Probably 500 a day to 10,000 a day. And they do it in every stock. And they get their reward. It's the end of the year. They want to get their bonuses. They want to be able to do it again next year. They press their bets. They keep pressing the bets. It has nothing to do with fundamentals. They have no idea. They come on here and taunt and brag. They have no idea. But they do know human emotions. They do know that. Well, why didn't you tell us to wait to buy the stock until now? Well, I didn't know. I didn't know. It just as easily, the AIP deal could have finished in June, and we'd already be $3-4 a share. I didn't know. I wish I had known, but I didn't. And who's to say we could buy our positions today or last week? Who's to say? I don't know. But they let the flow of money come in, and then it stops. They're selling all the way up, but then they're just using computers. They constantly in a range, sell stock you don't own, buy it back, sell, buy it back, sell, buy it back, buy it back, do it every day. And finally you hit an air pocket, the price goes down, everyone in retail freezes. Nobody in Canada can buy, they can't buy it at 29 cents, they can't buy it at $2 right now. The people that matter. So we freeze, they know all this. They keep selling and they press the bet. They have a short-term goal today. If they sold at the high today, 28.51, and they well, it's probably selling from yesterday. That got carried over because there's not much room in the trade today. But it closed yesterday at 30 cents, got down to 28 cents. And remember, they're doing it flash boy style, back and forth, back and forth, back and forth, using the dark pools, back and back, back. Blah, 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 blah. Well, if it's illegal, why do the prime brokers let them do it? They're good clients. So we freeze, we get angry at Corey. News won't do anything to this stock all by itself. The only thing that's going to change the price of Railtown is when big buyers come in. Well, you said they were coming, and I thought they were lined up, and I thought there was a lot of demand, and I thought, well, I don't think they're allowed to buy yet. Well, we closed AIP. Yeah, we did. But that's not the, over a 7-month period and an aggressive CEO and a successful product, they probably have other deals they need to announce that insiders might know about. I told you the one. Thales owes us more information, I'm sure. And it has to go through regulators. It has to be written up in press releases. Attorneys have to approve it. Board members have to approve it. In the case of Thales, it's probably got to go through a bunch of desks at Thales. Anyway, enough of that. Enough of that. it's my impression that the annual meeting is not going to be a major, a big deal. That's next week, though. And maybe there'll be some news before then. Who knows? I think there's probably going to be financials before then. But again, who knows? I still believe that research capital will come out with research. My guess is before the annual meeting. Of course, you would argue, since the stock price is down, it must be true that on July 2nd, 2024, Venkata Velakapundi put out this buy recommendation to $2 US, and the stock's never been to $2. So this must be bad research. We'll find out. You might be right. It won't do anything. No one would buy. But you might be wrong too, because AI wasn't all the buzz back then. And I think the thing that changed it was the NVIDIA chip. But I don't know. But the multiple here, 12x on revenue, 12x. Multiples now are 100, 150, 200x. That's the indication that the market's changed. So we'll see what happens when research comes out now. I'd love it just to come out so I have something else to talk about. But I think revenue's going to, news is going to come out. I'm not sure that revenue is going to be included in that news, but I think that analysts will be able to extrapolate and give us an idea of revenue. But more importantly, I don't know how many pieces of material news need to come out. Obviously, TELUS needs to come out, in my opinion. Maybe it's not obvious. It's just my opinion. They owe us that information on what that arrangement is. But there might be other things too. So I don't know that. Is it one more piece that allows the buying to come in? 2, 3, 4? I don't know. But all we can do is wait. Are we going to be aggressive and buy, aggressive and add, aggressive and hold, and just recognize this is the same attacks that happened down here? But once the material information is released, how many pieces it is, I don't know, such that buyers can come in from Canada shortly thereafter, this is going to be but a memory. And if you get 2 or 3 research reports, maybe more than Research Capital, you get a Canaccord Genuity report, I think this stock is $3.50 in 2 or 3 weeks from the break. But right now, it just continues. The pressure. We look up, and so it's just down, and it's just awful. And it just. Why do we look at the price? Is it telling us anything? We know that that's systemic, computerized selling. It's not brains. It's not knowledge, just systemic. Sell stock every day. Here it is right now. 52,500 for sale. Right now. 52,000. They never run out of stock for sale. ever. Every day. Now it's 78,000, 28,000 for sale, 27.5, 52.5. It's all fake, but you know that. Yet you still look. What's it telling me? I tell you what it's telling you. It's a great chance to buy the stock. I'm going to go to your messages, but I just want to look at one piece of revenue. Ignore all other revenue. Ignore everything else. Just assume that Corey hasn't developed any revenue. His leadership is awful. He can't get anything done. The technology has passed him by, and we should have given up on him long ago. Let's just assume that. But we do know that he bought AIP Partners. We do know that Railtown and AIP are in an agreement for shared revenue. 200 affiliates, the Conductor platform, the TELUS Sovereign AI Factory, shared compute. If these companies move their hosting to TELUS via the interface of Conductor, and Conductor now owns this network, they share compute revenue. Let's just focus solely on that. Let's not focus on anything else. Let's assume Conductor sucks anywhere else. All the other products suck. Any of the announcements Corey has made are all worthless. For the last 10 months, Corey hasn't found any users of Conductor. There's no revenue coming to Conductor other than the hosting link up. Lane Chain's beaten the company to the punch. Let's just be as doom and gloom as we can. Let's assume the stock price is telling us something. Number 6 here, which I've shown you, I have a slide of it, but if I go to that slide, I'll lose comments. Number 6, right here. We're going to move the hosting over to TELUS, and according to, I think it was Brandon, Dr. Tom Core said 125 companies currently have 120 million in hosting. Let's just look at that. $120 million. Let's use 20%, not an eighth, not 15%. On the other hand, not 30%. Let's just use 20%. Now, you're going to say it'll take a long time to move it all over. Yeah. But remember, we're dealing with projections. We're not dealing with having that it needs to be booked. It just needs to be believable. So 120 million. At 20%. Just from hosting, nothing else. He's a terrible CEO. The company's awful. The product sucks. The stock would be up if it's any good. Just assume all of that. We know there's $120 million spent by 125 companies. If we use a 20% revenue sharing with TELUS, it leads to a projected $24 million in annual revenue just from 125 companies in the network. 124 million. What is that bigger than? Lane Chain, the high end of their projection, 16 million. And they lose money. And they're valued over $1.25 billion. But oh, no. The shorts know something in the case of Railtown. It's clear as day. Where are the buyers? If you're right, where are the buyers? They can't break the law. So for hosting, 24 million in annual revenues to be projected at 100% margin. Now, is this the final number? Well, actually, that's only about half the companies. So if you doubled it, it'd be 48 million. But let's just move it to 40 million. Simply forward projection of moving the AIP network companies over to TELUS just for hosting, 40 million. Just hosting, projected 40 million. Just hosting, AIP network. Now, will they all come over? Will it take a long time? Maybe these things will mean that the multiple isn't 100x. Maybe the multiple's only 25x or 50x. Or 35x. That's to be determined by investors. Now, what other hosting could come? We know that Corey's terrible. He's a horrible leader, and his product's awful. If it were so great, he'd have contracts. Okay, I got all that. But where else from the hosting deal from TELUS could hosting come from? It could come from TELUS, directing TELUS's clients via Conductor. What would be in it for TELUS? Well, they need, according to the press release and other things I've read to you, I can't remember the article, they need that interface to be able to offer to their clients their telecom, their data center services. Now, maybe they use more than just Conductor, but they have this deal with Railtown. Why did they enter into it if they don't find Conductor usable? Well, Railtown's a small company. Conductor's a small company. AIP is a small network. But TELUS is a $20 billion revenue company, $20 billion. Do you think it's conceivable that if TELUS starts directing its telecom customers to its data center using Conductor, that the hosting revenue over time could be more than this? Double, triple? It could be. But let's just ignore it. Let's just say it's zero from TELUS. Let's just focus on the only thing we know about. We know the 120 is for 125 companies. If we extrapolate it for 200 companies, I think we can safely do that and assume that it's 20%. You know, maybe it'd be 45, 50 million, but I'm using 40 million. What multiple do you use? It's 100% margin. Well, it would depend on the growth. It would depend on the market. We know that Lang Chain on 16 million, 14 million, 12 million gets an 80 multiple, but they don't make any money. I don't think it should be 12 and a half or 10. I think with 100% margin on that revenue and any kind of growth, it'll be over 25x, might be 50x, might be 100x. Let's just use 25x. That gives you $1 billion. Gives you $1 billion market cap just from revenue that we know about. Well, it took them 9 months to execute the AIP. How long is it going to take them to move those revenues over? You know what? It really doesn't matter. That shows up here in the multiple. As long as it's coming. I think this multiple should be 50 or 75 or 100. That's $1 billion. We know there's 225 million fully diluted shares out there. So let's expand it to 250 million. That gives you a $4 target on the stock just from projectable hosting revenue. Yeah, but look at the stock price. You're wrong. They know something. What do they know? What do they know? It's just computerized selling. All they know is there's been no news yet. There's been no buying yet. Keep selling. They'll run away as soon as the stock snaps up. They'll go away. That's a $4 target on 40 million in revenue just from hosting at 25x. $4 target. Well, let's say the hosting revenue is 20 million. That's a $2 target. Just from that one source of revenue. I mean, if you want to go further and say it's a 12 and a half multiple, it gives you a $1 target. How doom and gloom do you want me to be? I've chopped out all the other revenue except hosting, which is right here in the document. And the company controls that network. The stock is worth more than 30 cents. Let's just try one more thing. Finger Motion has a market cap of 88.69. Let's call it 89 million. Railtown has a market cap that actually seems high. That we'll use it. Let me just check Yahoo. I'm not sure that's accurate. Then again, Yahoo doesn't have to be accurate. Yeah, 40 million. 40 million. Finger Motion's annual revenue for the last 3 years is approximately 35 million. Finger trades at 89 million in market cap. It doesn't make money. It loses money. So what does Railtown's 40 million market cap tell you? I just showed you that Railtown could make 40 million just from hosting. So if you assume Railtown does 35 million in 100% profitable hosting revenue, just from hosting, if you assume it just from hosting, and it's 100% profitable, which stock is priced correctly? Or are either of them correctly priced? Finger has a multiple of about 2.25, 2.5. I'll figure it out. Two and a half multiple, 2.54. Should Railtown be worth that multiple? Or not at all? Railtown shouldn't be, because Finger Motion has announced its revenue, and we don't know what Railtown's revenue is. So Railtown's market cap is currently $40 million, according to Yahoo. Can we agree that Railtown's in the AI space? Can we agree that Railtown is in an early stage company like Langchain and like 200 others, 500 others, I guess it is? Can we agree that it's in software development, dev? So the market cap for Railtown is $40 million. And we can agree it's in this high multiple space right now, where companies get taken over for 100, 200 times revenue. But let's use lane chain. Let's use 70. Let's not use 80 or 90. Use 75x. What if we use that multiple? What is the stock price of Railtown telling you about next year's revenue at 75x? It's telling you they're going to do 5 million in revenue next year. A little bit more. If you assume 37.5x, it's telling you they're going to do 10 million next year. So that's what you think the stock is telling you right now, is at a high multiple, the company is going to do somewhere between 5 and 10 million next year, and that's why it's worth 40 million. Actually, that doesn't make sense. Hang on. 40 million. My calculator doesn't always erase the last calculation. Darn it. So frustrating. I think it's much less. I think it's 500,000 in revenue. Yeah, that's what it is. It's not 5 million. It's predicting 550,000 in revenue. $40 million at these high multiples, predicting 500,000 in revenue next year, or $1 million in revenue next year. Do you think that's an accurate price of Railtown? Should you be going nuts right now? Should you be shivering your timbers, or should you be saying, my gosh, I'm just going to stop looking at the stock price, or I'm going to buy more? But this is crazy. It's mispriced. I know it's not a quiet period. I got it. It's the wrong word. I know it's in a period of time where major buyers can't buy the stock. I know it's in a period of time where the company can't really talk about itself because material information has to be disclosed first. I know it's in a period of time possibly that earnings are which is a quiet period right now. I know that the shorts are relentless. I know that. But I also know they didn't do a toxic note. I know it's a great business. And I know just simply from hosting, they're going to have a lot of revenue. The market's projecting they'll do 500,000 in revenue next year. Do you believe that? Yeah, because that's the stock price. If it's so good, the price would be up. I don't know. I can't. You buy one side of the argument or the other. I don't think you can have it both ways. Anyway, let me go through your comments before I go anywhere else. So I'm already missing some of the comments, darn it. Oh, no, maybe I'm not. Julie Kim, good morning, Julie. Justin Babish, wow, what an opportunity to buy more. Feels a little shaky, down 45% in your position. Yeah, I'm down in mine. I don't have as big a position as you guys have. But for me, I'm down, and it's an important calculation, I guess. It's important to focus on and measure and judge with. But is it relevant? Were you going to sell it at $1? Were you going to sell it at $2? If the stock price were up, are you going to sell it? Can you? And I'm not talking to you, Justin. I'm talking to everybody. Can we separate the manipulated price that buyers are absent and sellers are constant with stock that doesn't exist? Although some of it might be covered at the end of the day or crossed up in Canada. Are we comfortable with ourselves in saying that the stock at a $40 million market cap is mispriced when Lang Chain was valued at $1.25 billion? Does it matter if the market cap is 40 billion or 80 billion? It's a million, sorry, 40 million or 80 million? Or 100 million or 150 million or 250 million? If your stock were up double, would you sell looking at the Lang Chain valuation? All it means, Justin, and it's my fault, not yours, all it means is you bought at a higher price and you could have bought it maybe. We don't know. The volume today is 83,000. If I recall, you own more than 83,000, but I don't remember. Let me see if I wrote it down recently. Yeah, I guess I don't have it. I have it here. If I keep looking, I have it. But anyway, I'm not sure we could buy all of our stock down here. So it's interesting, but do we believe that when we buy a stock, it's just going to go straight up? Do we believe we're going to buy at the bottom? And it's my fault. It's not yours. I thought the price in June and then in July, and I skipped August, but maybe I said it in September too. I thought it was getting close to the last opportunity to buy it. And I'm not going to make excuses, but I did have some assumptions associated with it, but I'm not going to go through those. So we could have conceptually waited until now to buy the stock cheaper. But why did we buy it back then? Because at any time, the stock could have moved upward, but it didn't. So now we look back and we say, darn it, I'm down. But were you going to sell anyway? All of a sudden, a position, which in my opinion, I know that Tony Twinkle Toes, the tiptoeing tiger, makes fun of me that I projected $55 a share, which we can go through that. We can go through that too. I might be wrong. And I've said that. The higher your price target, the more likely you are going to be wrong. But I mean, it's not hard to get there. If they do 150 million in revenue, which I think is completely projectable at 100x, and there's 300 million shares outstanding, you're at $50. It's not hard to get to. What are the assumptions? Well, one assumption is they can project at 150 million. What's another assumption? That the company will be valued at 100x. What's another assumption? That there's 300 million shares outstanding, 75 million more than there is now. There could be fewer than that. So you come up with $50. What variables could be wrong? Well, they could do more revenue projected or less. The multiple could be higher or lower, but it gives you a target. So if you're in this, you buy it at 36 cents and you're in it for a target that's higher. It doesn't have to be my $50, $55 target. It doesn't have to be that. Maybe it's a $10 target, $25 target. So you buy it at 36 cents and it's now 28 cents or whatever you paid, 40 cents. And now it's 28 cents. You're down. It's interesting. But does that change your projection that it's going to go to, in my case, $50 if it gets those numbers? I mean, obviously, if the company sells itself, if it gets a bid to sell itself for $15 and takes it, then I'm going to be wrong. I mean, there's variables there. But what real difference does it make other than saying, and I'll just talk for myself, shoot, if I had just waited, if I had sold my other shares, left it in cash, and just waited to the day, I'd have 25% more shares. It's interesting. It's like saying, you know, if I'd gone up and talked to that little redheaded girl, she wouldn't be dating Chad right now. It's an exquisite kind of punishment to put ourselves through. I'm down 48%. Yes. But what does it matter? Is this locked in time? This is it? And I'm not speaking to you. I'm talking to myself as much as anyone else. Damn it. I just repeat the same things. What is missing? Buying. What else is missing? News. What else is missing, perhaps? Research. The only reason that matters to me is research might be how we find out about revenue, and research might be what causes buying. But at the final analysis, what is missing in the price of Railtown? Buyers. What's going to cause the buyers in Canada to buy? The release of material, non-public information. When is that going to happen? I don't bloody know. I'm sure it's happening as quickly as possible because the new generation of bureaucrats and attorneys is far superior to anything else we've ever had in human history. So I'm sure it's being accomplished as quickly as it should be. But in the meantime, Justin, the automatic computers sell. There's no buying. There's no news. Therefore, the company sucks. Hey, there's no news. The company must be a disaster. Oh. it's not the arguments. It's not the discussion. It just gets so boring. It just gets so boring because if the stock were 75 cents right now, you might, I don't know about you, Justin, but somebody might, I might, of course, I don't have any money, but I might be saying, oh, shoot, I should have bought more. There's always an oh, shoot. Nobody's going to buy a stock right at the best price. And nobody's going to buy a stock, even though I accept that it was not you. It's not, Justin, it's not because of you. I was the one putting a tight time frame on it. I've been wrong. I should have waited till November. But it's so impossible to know. I would suggest that you accept this for what it is. It's been I would say this should have been accomplished in June/July, this AIP. But let's brush that aside and just say this should have been finished in the first part of September. So it's what, September, October, November, 90 days ago. And so this is our cost because a professor was running the paperwork and the process and the interface with attorneys who were great and regulators who were fantastic. And the process took a long time. This is part of the thing. Why? Because the computers started selling this stock as soon as the announcement came out. By law, they had to put it out that they entered into a memorandum of understanding to acquire. So the computer reads MOU, it reads acquisition, it reads in a few weeks, it reads LOI, it reads Canaccord Genuity, and they just start selling. And when the stock goes up, they keep selling. And when it goes up, they keep selling. And what's been missing for all these months? The release of material information in enough volume or quantity or descriptive quality that the NDAs, the non-competes, the CAs, the standstill agreements, the regulatory prohibition against buying stock when you are in possession of material non-public information goes away. And it hasn't happened yet. So there's no bloody buying and there's selling every day. And the story never changes. It just grinds on. We're going to torture ourselves looking at it. I remember, I think it was with Steve, when the stock was right around this price. I think it was 28 cents or something. And I was so adamant with him that he should buy it because one of the things I told him was it is going to fluctuate and the shorts are going to attack and they don't go away. We know about this. Every time we get in a position, we know about this. And I said to him, if you buy it here, when that attack comes, you're going to be stronger. If you wait to buy it when it's 45, 50, 60 cents and the attack comes, it's going to make you sick to your stomach. And that's the position, Justin, you're in and I'm in. We're both in the same thing. My cost I think my cost basis is closer to 36 cents, but I don't have as much, um, you know, I don't have your assets. So it's uncomfortable, but I'm not selling. I mean, in my case, it's my IRA anyway, but primarily my IRA. But I'm not selling at 29 cents. I'm not selling at $2.90. And it'd be a question if it got to $29. That would be, it would depend on the information. But yeah, to me, the account is down. But for me, anyway, I wish I had money to buy, but I don't. I don't. And, but that's how I see it. The news the information we have since the stock was 60 cents, we have this investor deck, which if it's not honest, they'll go to jail. It has TELUS in it. It has revenue in it, but you have to do some arithmetic. We also have now the completion of the AIP deal, which is the critical first step in getting material information out. And we also know that they got the AIP deal done at fewer shares than they had announced. And so the shorting of the stock to break up the deal or to cause the issuance of many, many multiples of shares, that strategy failed. So we know that the company's improved its standing by buying the network that does 400, it's in here, 400 million in revenue. And we know there's going to be a hosting arrangement. That's my word. They're going to computer share revenue of 120 million, give or take. We know all this. This is new information. The stock is actually cheaper. But what could be doing it? We're in December. The criminals are pressing their bet and pressing. They're using other people's money, and they're gunning for their bonuses. They keep selling and selling. It's a short-term pushing and pushing, short term. As soon as they get bopped in the nose, they'll run away. But until then, they're going to be bullies. They're going to hold you down, throw sand in your face, put a noogie in your forehead, give you a wedgie. The market hasn't hit back yet, but when it does, you're going to be glad, Justin. In my opinion, you're going to be glad for the price you paid. I'm sorry that it's not cheaper. You could have, with that decline, you could have doubled your position if you waited till today. And you could have purchased all that stock. I don't know. And if you would have, that's the other thing. We assume, and just talk about myself, that if I had sold my stock, left it in the money market, I assume that I wouldn't have put it in GDC at $7 or $8 because it was going to 20 and I lose half my money. Or if I wouldn't have put it into one of these other things. Who do you think you're fooling? All these other things that come out. So just assume, yeah, I would have left it in cash. And then now looking at the stock price, assume I'd be buying it, you know? I'm sorry, Justin, that your position is down 45%. That's on me. And I wish I had had the foresight to predict that the stock would be 29 cents in December, and that I had told everybody to wait until December to buy the shares at 29 cents if we could. But it's an unknowable. It's actually unknowable. It's actually, if we punish ourselves with it, we do not know. Even looking at the stock price, we do not know that we could have established our position at 29, 28 cents. We don't know it. We don't know if we would have had the money. We don't know if we'd have the heart. We don't know it for sure. But what we do know is the selling never stops. It just never stops. And it's awful. The markets shouldn't be like this. Now, it doesn't mean stocks didn't go down when the markets were different. But this is it all? Maybe not. Maybe some of the selling was related to other transactions. Maybe some of the selling is tax loss selling. Maybe some of the selling is real. People are just sick of it, and they believe that because Corey couldn't get the AIP deal done, he's worthless. The company's worthless. Maybe people heard that AIP are really good guys. I mean, this Dr. Tom Core couldn't shuffle out of a shoebox if it involved running a public company. But he can give a great lecture and run a great think tank. I'm sure he's got skills. But hey, I heard that AIP is good and Railtown sucks, so it must be true. When are people going to sit down, like I'm suggesting, with a pad of paper and make your own projections of revenue and your own multiples? 120 million in hosting. Pick a percentage. 10%? 12 million. What multiple? 10% multiple? Okay. 10x, I mean. 120 million. That's a 50-cent target just on hosting. I'd argue that's a low number, but maybe that's what you're comfortable with. What about the roll-ups of 400 million in revenue? You could sit down and say, well, they're only going to roll up 100 million of 400 million. And if you want to be punishing, you could say they're going to issue 1 billion, whatever it takes to get to 1 billion shares. So your denominator, if you want to be negative, could be 1 billion instead of 250 million. But if they get to 100 million in revenue there, plus say 25 million in hosting, you got 125 million. You multiply that by 10, multiple of 10, you're at 1.25 billion. You divide it by 1 billion shares, you're at $1.25. Why don't you sit with a pen and a pad of paper and just do some calculations? You know that the fully diluted outstanding shares, I showed it to you yesterday and I'll show it to you again, is 225 million roughly shares. You know the multiples. They're very high, but you can punish those multiples if you want to. You know some of the revenue projections that could be out there. and you can make up your own ones. You can be negative and assume that AIP is where those guys are really good. They're great, and Railtown sucks. You could assume that. Well, you know the revenue sharing with TELUS. And luckily, Corey is in charge of the company now, but that subdivision is going to be run by Dr. Tom Core, and he's greater, he's better than Corey in your mind. Well, what are the revenues from the network? Just hosting, just roll-ups. 400 million in revenue, some part of that's going to be rolled up. Pick your number, and remember that it has to be projected. Does not have to be booked. 100 million of it, 150 million of over the next 12 to 18 months, 200 million is going to be rolled up. What if they only issue 300, the fully outstanding shares at 300 million? Or if you want to be negative, write down 500 million. Or if you want to be really cautious, write down 1 billion. Write down 2 billion shares. Whatever you want to write. And then if you've got 150 million in roll-up revenue, which is completely ignoring Corey because he's so bad, and you heard it from somebody. You heard that the guys at AIP are fantastic and the guys at Railtown are awful. And somebody told you that, let's say. So just focus on AIP. What's the roll-up number out of 400 million? I mean, 400 million's in this document. Assume it's 200 million over the next 18 months. And then you add in hosting. You could add in 50 million. You could add in 25 million. Or you could add in more. If you add in TELUS moving, you could add in 100 or 200 because of TELUS. Just write it down. Don't ignore Corey and his business because you heard he's terrible. Just take the network's 400 million. How much is going to be rolled up? Just take the hosting revenue from the network. We know 125 companies do 120 million in hosting revenue. We know there's probably 200 companies now. So maybe you increase that number or maybe you leave it alone. It's up to you. And assume how much. Maybe only 100 million of that hosting revenue comes over. Maybe you go higher. And then put a percentage. You don't know it yet, but figure out what you think. What would you enter into a revenue sharing agreement for? 5%? Probably not. 50%? Well, it probably wouldn't fly because TELUS is putting up all the money, but you come up with, I would say, you could use an 1/8 or 15% or 20%. You come up with it. So maybe you assume they roll up 150 million. They move 150 million in hosting revenue over the next 18 months to TELUS. Take 10% of that, not 20%. It's 15 million. So you got 165 million in projected revenues. Maybe you want to add something for what TELUS hosts using Conductor in TELUS's own sovereign data center in a revenue sharing agreement, because Conductor is the key component that allows TELUS to bring in AI companies to host their services at that dentist. Maybe you want to add something. Maybe you figure that's worth 100 million. Maybe you figure it's worth 145 million, 135 million. Well, that gets you all of a sudden to 300 million in revenue projected just from AIP. Screw Corey, he doesn't know what he's doing. Screw Conductor, those guys can't get out of the way. They don't know what they're doing. You heard it. Somebody told you by the phone. But the people at AIP you heard are fantastic. So use that number. The hosting plus the roll-ups. Maybe you come up with 300 million. Maybe that's not what you come up with. You put a multiple on it. 300 million times 10? 10x? $3 billion? But 10x might be too low. Maybe it should be 20x. $6 billion? But maybe that's too low. Maybe it should be 30x. $9 billion. 30x, that's not as high as 50x, not as high as 100x, but 9 billion. And if you want to use 1 billion shares outstanding, that's a $9 target. And then when you look at the stock price, all of a sudden your stomach isn't in your throat, and you're not focused on how much you're down. You're focused on, wow, I should average down, I should buy more. But I'm not, if you already own enough, you don't need to buy more. Maybe it's time to buy G-Bucks or Finger or GTII or all of these beauties. But we just keep asking. We keep demanding. Where's the news? Where are the revenues? Where is the buying? We do not want to accept the fact that getting the AIP deal done took forever, probably because a professor. But I heard that they're great. They're really great guys. Well, good. Look up Dr. Tom Core. I'll show you a picture of him. He's a good guy, but he's not a public company guy. But everybody's entitled. Dr. Tom Core must be much better than Railtown. Obviously, third-party arm's length negotiator figured out that AIP was worth 15% of the new co, and Railtown was worth 85%. But that must be wrong. I heard somebody tell me that the guys at AIP they know what they're doing. The people at Railtown, they don't know what they're doing. So I'm going to go with what I heard. I don't know. We can torture ourselves, or we can see this as an opportunity to buy. And I don't know how much more I can tell you. I do believe revenue is coming, Justin. I do believe although I have cautioned everyone, just for sanity, to plan on January, because we got the holidays coming up. It doesn't help that my apartment has no heat, but I'm keenly aware that the Christmas holidays are coming up. So psychologically, Justin, and I'm not picking on you, I'm just I see your name there. For me, I'll just talk for me. If I had money, I'd be planning on buying more of this stock this week, next week, and the rest of the year, because I took my pad of paper. I sat down and I wrote down the revenue. There can be revenue from enterprise sales agreements generated because of conductor, Railtown enterprise sales agreements. That's broken down into three parts. The ones they've already announced, the ones that are currently in the pipeline, and future enterprise sales agreements. But we've already agreed that because somebody told us on the phone that the AIP guys are great, but the Railtown guys, they don't know what they're doing. We've already agreed that we shouldn't count on any revenue from there. But I, I think that's a little self-defeating. So we have the pipeline, both past, current, and future for Railtown. We have Railtown's other potential data centers, maybe, or other major deals, maybe. We don't know anything about that right now. We know that Railtown can cross-sell its services into the network it currently holds, which is 5,000 end users captured. They get a monthly newsletter. They're going to use a central platform controlled by Railtown, and they're cross-selling with each other. So we can assume that Railtown's going to get business from those 5,000 customers as an enterprise sales agreement. But let's be negative. Let's assume, just because we heard it on the phone, that the guys at Railtown don't know what they're doing. So we'll just assume that's all zero. And we heard that the guys really quite impressive at AIP Partners, and they are. It's hard to argue with it. You got Mike Norbrega, you've got John Ruffalo, you've got Dr. Tom Core. So let's just assume that's where the revenue's from. Well, you've got 400 million plus to roll up. You've got hosting revenue from the existing network, but that revenue can grow if they get more companies. And then you've got the potential of Telus' hosting revenue. And then you've got the potential we've already agreed Conductor's awful. They couldn't get this deal done, so it must be awful. But if some part of us tells us that Conductor, Lang Chain, Rail Tracks, not Lang Chains, Rail Track and anyway, their Lang Track are good. Maybe there's other hosting revenue comes in at these data centers. We don't know that deal yet. I mean, I know we're not allowed to do this because we have to be negative because the stock price is down. What if Railtown's product is first in class, first to market, and it's light years ahead of Lang Chain? What if that's the case? I know we're not allowed. We're not allowed because the stock price is telling you all you need to know. I'm going to move on, but Justin, I do apologize. I wish I had had the foresight to tell you to wait until the stock was 29 cents, 30 cents. I didn't. And I do wish your account wasn't down 45%. I really do. I mean it. I really mean it. But, you know, if we wanted prices to stay stable, we'd go buy a private placement like the ones that invested in Langchain, because we'll get a monthly update. We won't have to see the price, and it'll always have our original investment, and we won't know any better. It's, it's price we pay. This is a short-term aberration. You know why it is. And it'll be over with by the middle of January. And Justin, by the way, I don't mean to say that it couldn't change very quickly. It could change. What's today? Tuesday? What if research came out tomorrow? I don't think it can include everything, because I really think TELUS has to give us some information. At a minimum, TELUS has to give us information so that it removes that full disclosure requirement. But there might be more out there. But what if research came out tomorrow? And what if next week before the annual meeting, one or two pieces of dramatic news came out, and the reason I'm saying dramatic is it would get rid of the full disclosure obligation. It is possible that there will still be some buyers in Canada who have not gone on vacation, and the stock goes to $1.50, $3.50 by the end of the year. It can happen. But I think for our mental sanity, we have to assume that the selling is going to continue. There will be vacations taken at law firms and regulatory offices, well earned and well deserved, and that paperwork will continue to be slow, and that when research comes out, the desks, the trading desks, and the investment committees that'll make the decisions to buy might be skiing or might be sunning somewhere. And you've got New Year's holidays. I think we have to assume that it might be a very slow month ahead. And Justin, that's not your fault. That's my fault. I should have realized that, and I should have seen it, that by acquiring AIP, it was going to be a 10-month delay in the story. And that in that 10 months, shorts would come in, and buyers would be sated, and it's just, and then news would be blocked. I should have seen it, but I didn't. And so I do apologize for that. On the other hand, Justin, I think it's a huge opportunity. I think the price you paid is a great price. I wish you had paid less, but I think the price you paid is fantastic. And I think that'll become clear by the middle of the first quarter. And whatever you paid, I can't do the arithmetic, maybe 55 cents, maybe. I think the stock will be $5.50 in the first quarter of next year. I've been wrong every other time, so why would I be right now? I think the reason I'm going to be correct is that the backdrop in the overall market for AI software companies remains really strong, both on the Wall Street level And there is an arms race to acquire these first movers, which I think Railtown is. I know I'm not allowed to say that because Railtown is down and therefore I have to be wrong. But I think Railtown is a first mover. I know they couldn't get the AIP deal done, and that was their fault, not Dr. Tom Core, because Dr. Tom Core is fantastic and Corey doesn't know what he's doing. I get all that. But those are all opinions. I don't necessarily agree with them. I really don't. So this is an opportunity to buy more. Maybe what I should have been saying all along is to dollar cost average. But I actually thought the stock, I thought the deal would get closed in the summer. Anyway, I don't know what to say, Justin. But it's on me, it's not on you. And the only thing I can do to try to make it right is to stand here with you to tell you, of course, it's in my judgment, but I think you made a great investment. I think the price you paid was fantastic. And obviously it could have been better. But that sort of 1 month to 90 days from now, you're going to be very happy. And the key changes are going to be those three things. Material news, full disclosure, will have been made. Revenues will become clear. And the main vehicle is directly to institutions, but it might be through research, whatever way. Revenues will become clear and buying will come in. Those three things. And I think as the stock goes up, these opportunistic shorts will go elsewhere. They'll go pick somebody else's pocket. But until then, they're having a lot of fun. It's all automatic. It's all a free good. To them, it's just a program. It's just a way to make money. And they'll do it all day long with the permission of Ann Wagner, Adina Friedman, Chuck E. Cheese Cromwell, and most brokerage firms don't even know what's happening under their nose. It'll just keep happening. But that'll change, Justin, when the stock's $3, $4, $5. But unfortunately, it hasn't happened yet. And that really is on me, Justin. It's my timing has been completely wrong. So I apologize for that. Ward Richardson. Let me get my pen out. Man, it's really cold today. Really, really cold. I don't know what I could do. All right, Ward, let me read what you said. Good afternoon, William, RT Crew. Microsoft to invest $5.4 billion in Canada. Wow. I'll try to find it. That's probably to make sure that we can keep track of our new citizens up in Canada. That just shows to me, Ward, that there's just so much money coming into this space that the multiples are going to stay high. And I mean, I guess our choice is to assume that Railtown's going to do 500,000 in revenue next year. I think that's really deeply dark translation. I think it's much more likely that Railtown will do 50 to 100 million next year, 150 million. Just call it 50 million. Let me put it that way, Ward. I think Railtown will do more in revenue next year than its current market cap. So the market cap for Railtown right now, according to Yahoo, is 40 million. If Railtown does 50 million in revenue next year, the price of the stock right now is under 1 times revenue. It's under 1 times revenue. And people think that the stock price is telling them something. I think the stock price is telling them it's a screaming buy. You can pay, if Railtown next year does 80 million in revenue, projected, but let's just say for 12 months next year does 80 million. You're paying half. You're paying 0.5x. You're paying half of 1x right now to buy Railtown. Ward Richardson, Microsoft will build out Azure cloud, expanding data centers, enhancing computing power, supporting Canada AI startups like Cohere. I don't remember, Ward. Cohere is a vague competitor, vague to Railtown, but there was something. I don't want to say it because I can't remember what it was exactly. But I heard something a little off in their story, and I'm glad they're doing well. But you could easily see Microsoft supporting Canada startups like Railtown. Hey, Jeff Grimm. How are you? Wow, so they're going to support partnerships. Wow. Silver Skyrocket. Hello, William. Hello, everyone. Jack Hamilton. Good afternoon. Good afternoon, Jack. Ward Richardson. Microsoft announces biggest ever Asia investment with 17.5 billion in India. That's pretty smart. That's a pretty smart investment. They speak English, they work hard, and they have the world's largest population. It sounds like a smart investment. Jack Hamilton, I like the saying goes, if it were easy, everybody would be doing it. Exactly. And short selling is easy. Everybody is doing it. All right, here comes McDermott. Unfortunately, this could see 25 cents or less, making many accounts down 50%. Thank you, McDermott. That's the courage that it takes to make that prediction when the stock's 29 cents You're predicting 25 cents? Man, I mean, that's some foresight. I got to give it to you. Let's address both points. I yesterday and actually over the last several weeks, but particularly yesterday, I showed a chart that I think I said that today they would try to drive it, open it down. And I also I said that they would try to get it to, in a spike, to 27.5 cents. And then I showed a lower target as well, which I don't remember. I'll try to show the chart. I don't want to lose comments, so I'll try to remember to put up the chart and show you. So I don't think you're particularly a genius or particularly predictive. Any stock can go down from any price. So I happen to agree with you. Railtown could go below 25 cents. But it's not going to stay there if it happens. And it's as meaningless as 29 cents. It's as meaningless as 40 cents. It's as meaningless as 50 cents. But that's because I've taken the time, and I guess it's been completely a waste of time. I try to show the information I use. I've shown videos. I try to back up every point I make. But I guess it's all worthless. It all comes down to the stock, unfortunately, could see 25 cents or less, making many accounts down 50%. What's your point? To scare people out? That their emotions, they're going to give up and they're just going to get out? A couple of people did. You can consider your job well done. But I think your comment is meaningless. It's a really weak prediction. And it's obvious, too. It could go down. Absolutely. And, of course, accounts will be down. But what's your point? Is that how you measure investments? Do you know, I met with a friend of mine I used to work with at Merrill Lynch, and he's got all these contacts. And Wall Street wanted to, and they may still get it done, they want to create a mechanism that housing prices can be on the computer, and maybe people can buy into indices and ETFs and all that. But it's even further. They want your house to be on the computer screen. Is that what you would do with your house? You buy it for $500,000, and the market, Wall Street, takes over, and it shows on your screen that it's worth $425,000. And you go, oh my gosh, people, unfortunately, it could go down to 400,000, and then I would be down 20%. Is that how you do it? Or you recognize that you're living in the bloody place, and it doesn't matter what a bunch of gamblers are pricing your house for. If you've done your homework, the only way 25 cents makes sense in this stock as a permanent price and as a permanent loss is if you believe that the market cap of 30 million or whatever, something around that, for Railtown, that 25 cents or below would imply is correct, and it's telling you something. And you're ignoring that the buyers who know the industry and have the wherewithal and are institutional wealth advisors and et cetera up in Canada cannot buy, are not able to buy. The buy-sell nature of any market that comes to price discovery is completely missing in the current price of Railtown stock. Well, unfortunately, people could be down 50%. If you add in that your friends are shorting the stock, it's meaningless. If the stock goes to 25 cents or below and the market cap is 30 million, what is it telling you? Obviously, it's telling you that Corey, just like the bird whispered into your ears, that Corey and all the people at Railtown can't get out of their own way. They don't know what they're doing. So you write off that. And I guess it's telling you that AIP deal isn't going to close. Oh, wait a minute, it did close. It did close. And it's telling you that there's toxic, no, wait a minute, they didn't take any toxic financing. So what is it telling you? That the revenue, the hosting revenue at TELUS, shared with Railtown now, could be if they have 200 million projected hosting revenue and they got 20% of that, could be 40 million in revenue. But I guess because the stock in the short run, with buyers missing and computers selling continuing, just pressing to make money today, not predicting the future. The shorts are just predicting the next hour. They're not trying to predict the next quarter. But I guess what you're saying is that 40 million in revenue over the next 12 to 18 months from hosting is worthless. I guess that's what you're saying. But I really, McDermott, I really appreciate that you've taken the time to give your opinion. Hey, Steve, what's up with you? Hey, Donna, good afternoon. Hey, Hawaii, morning, Bill, waiting for funds to settle. We'll be ready to buy more on Monday. Relax, we know what we own. All right, I'm glad. If I had money, I'm just down to my last shuck with nothing left to lose or nothing left to sell, and a long way from home. I would love to buy, 10,000 shares, love it. Hell, I'd love to be able to buy 300,000 shares. But I'm glad you are, Hawaii. I'm glad you are. Julie Kim, I'm glad you're going to buy more tomorrow at the big sale price. All right, let me see. Hey, Pete, the Greek. If it's just selling stock that's not owned and this keeps happening, what the fuck are we even doing here? Honestly, still holding, but disgusted by this fucking country. Well, I think what we're doing here is we're trying to make the money back we've lost in other trades and make a lot of money on the upside. you know, our guts won't let us hear it. And I guess our brains won't let us hear it. But the private equity boys and the private equity girls on Wall Street, many different institutions, just valued Lang Chain at 1.25 billion. Now they don't suffer from short selling. They don't suffer from that. But they valued it at 1.25 billion based on annualized revenue of 12 to 16 million. That's their estimate. And the company makes no money. And they raised 125 million for overhead and for the development of their product. In other words, it's not on the face of it as advanced as Railtown. Now, we couldn't buy into Lang Chain, and we couldn't buy into that offering at 1.25 billion unless we happened to be in one of the funds or one of the institutions who invested. So what are we doing here? We're buying a mispriced stock. The stock is the wrong price. According to Yahoo, the market cap is 40 million right now. That might not adjust for additional shares that might be issued, but that's what Yahoo says. They are up to date on the acquisition shares being in there, I think. It might have been OTC Markets. But anyway, they've got it at 40 million market cap. So what are we doing? We're buying a company at 40 million market cap that has a better product than Lang Chain and has a captive audience of 5,000 end users and 200 companies and hosting revenue, and does not need to go to the market to raise more money because of that. Has a clear path to 100 million, 150 million in revenue. We're taking advantage. I wish I knew what word to use. We're taking advantage of a period of time since February 11th, where the major institutions, smaller institutions, medium-sized financial institutions in Canada cannot be told about Railtown, cannot buy Railtown, where insiders cannot buy Railtown, where retail cannot buy Railtown because the brokerage firms will not solicit orders, and the only brokerage firm that knows about it is Canaccord. Everything's on the restricted list. Research is in a holding pattern. And it's all because these great guys that are just fantastic over at AIP couldn't get their deal done, but they're the great ones. Obviously, I think Railtown had the vision 6 years ago, Marwan and Corey, to get together. They've each got 20 to 30 years in software. And they said, do you remember when we'd all sit around and our software was going to crash? It was all hands on deck, and we had to spend the next weeks finding and fixing that problem? What if we, using AI and using the future computing power, created a cloud-based system using AI agents in a vertical way? What if we created that? Because there is no solution. And you know what? I'm going to check with Microsoft. You check with AMD. You check with NVIDIA. Find out if they know of anything like this. No, nobody's doing anything like it. Well, why don't we do this? It's a 300, by independent analysis, it's a $300 billion market, and we can be on top of it everywhere. And as we went, we can communicate with all the apps, with all the developers. We can centralize everything. We can process all data, including voice and handwriting, and create it into one usable set. But we can predict bugs. We can suggest ways to fix it. We can even write software. And we can develop software into this AI self-learning, and I lose the vocabulary, but this self-learning agent, they started out with Conductor. It was called Scrum Master. Then they created Lang Tracks and Rail Tracks, and they've got two others now. And I've shown you what they do. But Pete, all we want to see is when we buy a stock, it goes straight up. That's what makes us retail. And that's what separates us from the professional investors at institutions. They establish a position. If it pulls back, they buy more. But they don't, unless the story changes, they make adjustments. Stocks pull back. But in the case of Railtown and Canadian stocks, you're right. I do not know how to break it to anyone. But in North American markets, all stocks, from IBM and Tesla all the way down to G-Bucks, everything has been put into the electronic system, and a small portion of Wall Street bankers, Wall Street executives, understand or saw the opportunity to treat securities just like cash. So in your banks, when you put money in the bank, it's not there. It's all electric. It's all electronic. And the banks use the fractional reserve banking system, and they claim it's 10 to 1. But I bet if you looked, it's not even 100 to 1. It could be as high as 1,000 to 1. If you count in the derivatives exposure, which is hard to know. But that's fractional reserve banking. You deposit cash, they keep 10%, but it might only be 1%. It might be less than that. And they lend out the rest, or they invest it. They put it all out. It's fractional reserve banking. And if you go into your bank and ask for all your money, you'll probably get it. But if 100 people went in at the same time, they'd start making excuses about, well, we can give you a little bit, but Sarah's on vacation. We'll get your money in 10 days or whatever. Well, Wall Street realized that by turning securities into electronic entries, they didn't have to prove anything to you anymore. It's just like your bank account. As long as you see in black and white on your bank statement that you have $10,000, hey, you have $10,000. You don't realize that what's held in reserve at the bank is maybe $100 against that $10,000. The rest is out at risk. But you don't know about it. You look at your statement, it says 10,000. Well, geniuses on Wall Street recognized that they could expand their assets under management, expand their collateral by changing the rules. So now for every one so-called real certificate, one stock, there could be 10, there could be 50, there could be 100 shares sold into existence, lent out, just like the banking system, and across everybody's accounts, but no one knows. They look at their statement, it's in black and white. I must own it. They took fractional reserve banking and they created fractional reserve securities, custodialship, securities trading, fractional reserve securities banking. And that's just the world we live in. It's all over the globe. It's everything. It's in the precious metals markets. It's in the bond markets. It's in the ETF markets. It's everywhere. But if your stock is over, let's say, $10 and $1 billion in value, you have institutional sponsorship. So institutions, which used to, many of them, not all of them, many of them are the prop desks that used to be inside of brokerage firms. Many of the hedge funds are just the guys that used to be the trading desk inside of a firm. But now they're all outside, running their own funds, running their own equity that they raise. Everything's up to bet on. They make 2% annually, 20% of the profit. Bet on everything. But if you have portfolio managers or institutions or venture capital firms or bankers, wealth advisors, and your stock is, say, Tesla, there's short selling against that. There's the leverage. They may not go out 100 to 1, but it might be 10 to 1. So it's all electronic. So there might be 10 times as many shares of Tesla out there than technically exist, because there's this shorting going on, selling a stock that doesn't exist. I doubt it's that high, but conceptually it could be. But what offsets it is a lot of the trading doesn't even happen on the exchanges necessarily, but the institutions who own the stock or the ETFs who own it, many of them are set up for reinvestment. So it might be retirement plans. As new money comes in, it's put in on a certain ratio. It could be as a fund, there's sales in a fund or there's dividends. Everything's reinvested at the same percentages. So there's a reinvestment part of it. There's also new monies coming in, flooding into ETFs, flooding into mutual funds, flooding into other investment funds. That gets allocated. So there's buying that offsets the shorting. Further, there's research. It might be internally, but it also might be at Merrill Lynch on Tesla or Morgan Stanley. And then brokers, they're called wealth advisors now, can pick up the phone and say, you know, I think you should buy, the stock's down. You should go ahead and buy some Tesla. And then individuals have access to that research. Mutual funds have access to it. And there's counterbalancing buying if the stock gets cheaper because of shorting. Ultimately, when the crash comes, which is why I think after we go up, the market is going to crash 95%. The shorting it's going to run wild. There will be no system against it. But we're not there yet. So the difference is in stocks above $5 and above $1 billion, there is knowledgeable, well-heeled, well-researched trading desks, new money, margin money, leveraged money coming in to buy those shares. The shorting might cause swings that are greater than normal. The shorts might do the same pressing of their bets and nipping bits and pieces on the way down. And they may know that when Tesla has bad news, it's going to come down quickly. But on the other side is going to be the instantaneous news that they landed a rocket ship on Mars and the stock goes up. In other words, there is broadly price discovery for Tesla. Now, I would argue they should get rid of the fractional securities system. They should get rid of the short selling. The law is this, Pete. The law, securities law is this. You have to locate the shares you're going to sell if you don't own them. You have to locate those shares in writing, and you have to be able to deliver those shares at settlement. It's the law. But nobody follows it. But in the bigger cap companies, there's natural buying that's paying attention to the stock, that is informed, that will counterbalance the selling. But when you get under $5, you're under the Merrill Lynch rule. The Merrill Lynch rule says that the thundering herd of 25, 30,000 brokers cannot recommend the purchase to their clients of any stock under $5. Not allowed to solicit orders to buy in any stock under 5,000. That happens at Merrill Lynch, Morgan Stanley, UBS, Prudential Beige, Tucker Anthony, Johnston Lemon, A.G. Edwards, whatever companies are out there. Nobody professional can recommend to their clients to buy a stock under $5. The higher price Buyers exist. There are no buyers under $5. Unsolicited trades. So if you have an E-Trade or Ameritrade, what we do, we listen to somebody on Twitter, or we get involved in the meme that AME is going to go up. So we rush into it. Well, those are unsolicited. We can do that. But not all firms will accept those orders. No wirehouse will accept those orders. The big firms won't accept them. Even some stocks are not allowed to be purchased on the online firms. But that's where some buying comes in. But it's ill-informed. It's not based on research. It's based on tips, something we heard. It's based on short squeezes. It's based on hysteria of the mob, either direction. And it didn't take too long for a group of men to see how they could take advantage of it. They do the same thing. It's fractional reserve security lending. They set up an account at a prime broker with a fictitious, it's a real name, but it's a front LLC. They put some collateral in there. With the help of an attorney, they sign a bunch of documents and they start trading. They get a group to put a document together that CEOs can sign, and then the hedge funds can start shorting. And it's just a whole campaign. Why? Because of the Merrill Lynch $5 rule, and because Merrill Lynch, Morgan Stanley, Dean Whittier, Johnston Lemon, Sutro, because they all went into managed money, they started hiring young people to just attract assets, gather assets, and tell people to put it in ETFs, mutual funds, or managed accounts. They stopped having trading desks. They stopped having research. They stopped having buying, even from those mutual funds and institutional accounts, in anything under $5. They stopped having investment banking for anything under $5. But they didn't tell the world about it. Everybody thinks the rules are still the same, and CEOs think they can raise capital. There is no capital formation. All you get are the R.E. Fleischmans or whatever, Jeff Easton's and Kurt Kramer's frauds, but backed by the Stevie Cohens. Here, use this document. Use this attorney. Call us. Let us know beforehand. We'll give you the money to give to the client as long as they sign this and the shares are in the account, and they start selling. Because there's no buying, Pete. There's no banking. There's no research. There's no enforcement. There's no uptick rule. They don't even bother to know the customer. And we know this in stock after stock after stock after stock after stock. We know it in finger motion, COSM, Logic, Nixie, Next Trip, although Next Trip might be an exception, G-Bucks, ZJYL, GDC maybe is I doubt it. Any Hoo, any stock, MTN, any stock the Charm Boys bring you, it's all about this. It's all about it. They need to create a meme, even if it's a mini meme. If they're lucky, it'll be expanding meme, so that the buy side computers can fool the sell side computers. It's all flashboy crap. And if they can get past the parameters that are the ultimate fail-safe limit on the sell side, there'll be some buying in. Doesn't mean anything. It's just temporary. It happened with AME and GMC, but people still believed it. All that guy Cohen got the stock up to $19 a share in cash, but people still believed this was going to be the mother of all squeezes. It's all fraud. So I agree with you, Pete the Greek. Why are we even in these markets? My whole goal of getting you and others to consider Railtown is to get away from these markets. But what is the vehicle to get away? It's Railtown. So Railtown established itself about 6 years ago with a visionary idea, and they went public in Canada, to my memory, in 2021. Pretty bad timing. We all know what came. But why did they go public? Same reason CEOs go public everywhere. They need to raise capital. It used to be you started out with friends and family, you went to angel investors, and then if you were lucky, you could avail yourself of a small investment bank, go to the over-the-counter market, go to the NASDAQ, start raising money in a healthy market. Doesn't exist anymore. Wall Street has claimed the entire process of capital formation for themselves. They pick Zuckerberg, they pick Bezos, they pick Elizabeth, the one that did the blood test. They pick these, and then they guide it through all stages so they can pluck all the fees and value, and then they'll dump it at the top in your retirement account. It's what they're going to do with LangChain. By the time you see it, it'll be a $30 billion company, a $100 billion company, dumped in your retirement account by some wise broker advising you to do whatever. There won't be any shorting. You won't have to go through the uncomfortable watching your stock. Oh my God, the stock is down. What does it mean if you don't sell? Doesn't mean anything. If you sell, they got you. It's a high wire act in that sense. If you cross the chasm without slipping, you're back on firm ground. But as you're walking, if you look down and lose your footing, and you're just walking on a rope with two side ropes, you lose your footing, sayonara. That's what's going on here. A test of your courage, your emotions, and they know it. But Pete, think about this. Whoever's shorting this, it's probably a group of guys in New York, group of guys in Toronto, group of guys in Miami. They've taken some capital from some wealthy guy, and they've got these computers going. And he says, I'll give you, your budget is, your capacity is 10 million, or your capacity is 50 million. Maybe it comes from Stevie Cohen. Go find some stocks to short. We'll split it 60-40. 60 for the big guy, you get the 40. If you lose, just be honest with me. Don't call me except on this burn phone, or just meet with Louie at Harry's bar, and he'll set up a meeting. But this is our last meeting. This is our last call on the regular phone line. But we'll protect you. We've got the lawyers to protect you. As long as you follow this procedure that Amy will tell you about, we'll cover your losses. But your profit, the losses come out of your profits. And after that, we split it 60-40 or 70-30. So these guys start shorting. Now, what, Pete, do you think they know about Railtown? That's right. They don't know anything. They're selling every stock out there. They're looking at charts. What resistance are they meeting with in selling Railtown for the last 10 months? Occasionally, I guess a month ago, some guy on Reddit starts spreading the rumor that they were closing the AIP deal and the stock rallied, like, I forget, October 8th. Somebody was disclosing something, but it didn't mean anything. So on the chart, over the last year, they've had 2 run-ups. What's the risk? They just keep selling, and they do it during the day. They sell stock they don't own without locating it. They sell it, they buy it back, sell it, buy it back, and they do it amongst themselves, totally against the law, or they just do it with their own computers, totally against the law. It's all, they don't disclose it. They should disclose it to you, Pete. It should be disclosed to you. It should be fully disclosed. It has more of an impact on your decision-making than the news that TELUS signed up with Railtown. But nobody discloses it because they own Congress, they own the lobbying firms, they own the attorneys, they own the bloody presidency. Look who sits next to Trump. Fink and Weisskopf and Black, I think's the other one. Anyway, it doesn't matter. Major people at the financial institutions have direct access to the president. Nothing's going to change. Nothing. So you ask, why are we here? Where are you going to make the kind of money that you're about to make in Railtown? You're going to go buy a CD? You're going to buy a mutual fund? That's why we're here. But these guys, in the short run, they're not here for a year. They're not here for 6 months. They're not here for 90 days. They're here for 90 minutes. They're here for 9 days. So why do they do it? Because we run out of money. I already told you, when a news story comes out that says memorandum of understanding, letter of intent, acquisition, Canaccord Genuity, and 2 CEOs agreeing we're going to negotiate, well, They know if they short the price down, a la a Northwest Bio, a DBMM, Logic gotten into this trouble. They short the price down, they'll break up the acquisition, which by definition the stock will keep going down. Or if the acquisition goes through, it'll be renegotiated with a hell of a lot more stock issued. And because of Canaccord, if they need financing, Canaccord will come up with a financing. Well, these guys will have already sold the stock down. They have cash sitting there. They'll be one of the first calls from Canaccord. They'll just wire the money to Canaccord. Canaccord loves it because they don't have to do any work. They have a big payday. They close out some or all of their position. Everyone's happy. They get some warrants. It's you scratch my back, I'll scratch yours. And it goes on and on and on. But what is different about Railtown? There's nothing different about the shorting. That is happening. And there today, it's 87,000 shares. If they picked a penny out on 80,000 shares, they made $800. They love it. And that's what we see. Maybe there's more in the dark pool. Or maybe they're moving it around. We don't know. The brokerage firms love it because they charge stock loan fees. They charge margin fees. They charge commissions. And even if in the Railtown case, they don't make money today, they're making it shorting G-Bucks, shorting GDC, shorting ZGLL, shorting MTN, shorting whatever news stock you're hearing about on Twitter. And they put it all together. Hey, we had a good week, fellas. And if they lose money, they can write it off against their gains if they pay any taxes at all. It has nothing to do with the fundamentals of the stock. Nothing. But there's no buying. There's no research. There's no trading desk. There's no squawk box call to going out to 20,000 Merrill Lynch brokers. Attention all executives, attention all executives. This is Amy Woodruff out of the AI technology research group. I just want you to know that Railtown is on the verge of a major contract, and we believe this sell-off is an excellent opportunity to buy. And I will be coming up with a research note tomorrow morning at 9:30. But I just want everyone to know that we will be a buyer up to 50 cents a share. None of that happens. None. So they just keep selling. And as the stock goes up, and usually people buy into the rally, we're all the same. We're all the same. Nobody can fight that. We see a stock going up, we all do it. I'm going to miss out. When it's down, we're all sick to our stomach. But as it goes up, more buying comes in. What happens to these guys? Well, they know the buying is ill-informed, emotional mob of retail investors. They know there's no research analyst. There's no trading desk. There's no institutional buying. There's nothing. So they just sell and sell. And if they have a bad day, they sell the next day. And then they get the next day. And they get the next day. And just like Roaring Kitty, when that stock went to $85 because of him, the sellers sold it back down. So they make all that profit. And then they get it to $60, they sell it back down. They get it to $48, they sell it back down. They just keep at it because they're professionals. They don't panic. They have a strategy, and they stick to their strategy. They don't get sick to their stomach when they were shorting the stock. Let's use Railtown. They're shorting the stock and it goes to 70 cents. They're not panicking. They just keep selling. Because their computer is still, which is reading all the headlines, still sees MOU. They see a tripartite amalgamation agreement that's still going to take more time to settle. And we scream for news. News doesn't matter. We scream for the CEO's head. That's not going to matter. CEO doesn't even understand shorting goes on. They just keep selling. And they do it with such constant pressure. They manipulate the price, which is illegal. They always keep it in red, so your mind goes, oh my God, I'm losing money, I can't take this anymore. Because you're no longer an investor. You're just thinking with the price, you're thinking with, and I do it too, by the way. I'm not picking on you, Pete, I'm talking in general. All of us. Oh my God, every day it's down. Oh, I don't get any reward. This is just punishing me. I want positive affirmation for my decision. Well, if you go in it, knowing that the shorting is happening, it shouldn't surprise. And we did know it was happening. I even discussed it many times, that we had to be aware that they are there. But what's different about Railtown? Well, in the case of GTII, you had the Kramers and the guy Leo, who had like 6 or 7 investors, their core investors. Their goal, they got the company to sign this note. They did a toxic financing. They sold it down beforehand, and their goal was to bring it all the way down to a penny or less, seller box it. Number one, they wouldn't have to pay taxes, and there was so much to steal. Well, there was a toxic note there. Plus, GTII didn't have anything. Nothing. Except ham and a willing sort of insider willing to try various attempts to cause a short squeeze. And I think one might have been working. What did Finger do? Finger took financing, toxic, from Jeff Easton. Well, Jeff Easton said I heard, had 4 clients, and maybe one of them shorting. Well, that surely they were shorting. And they, if this one investor hadn't bought back the position at $10 a share, they'd still be shorting it. And Finger would be seller boxed. And doesn't matter how good the story is. And it would have 2 or 3 billion shares outstanding by now, just like Northwest Bio or DBMM. But this gentleman stepped in, I think, doing a good deed, actually, for everybody by buying out that note. It still was tough, and it still is tough. The story's not over for Finger, because even with that toxic note gone, the hedge funds had big short positions. They still are kind of all in on it, and the methodology still works because Finger still needs to raise money. And I doubt they'll raise it at $1.50. It's more likely $1.25, even $1. And then they'll press it down. They'll do the reverse split. We know the whole game. Then you have a guy, who presents himself as fighting all this. He may or may not have been, but he found a bunch of pictures of plump penthouse pets in a storage house, and he decided to start a company. And the stock goes from pennies to 250. Everybody's excited. It's gonna squeeze, and it's going to be bought out by GTI. But they didn't sign at that point. They had not signed a toxic note to my memory. But guess what? They may have already done one. But after they canceled the deal with GTII, they immediately went and did a toxic note with their best boyfriend, Jeff Deaston. And then he did a mother of all reverse splits, 500 to 1, evaporating everybody, because there's no buying, there's no research. It's a shitty company anyway. And they need capital. And they go to Jeff Easton. COSM. They bribed the CEO and a few guys to stop a squeeze that was going on, but then they crossed him with a financing. He thought he was special, but the financing crushed the shareholders in the company. And I think he did a 500 for 1. Why? Because there's no buying, there's no research, there's no trading desk, there's no uptick rule, there's no enforcement, there's no know your customer, there's no objection on selling stock that's not borrowed in writing in the first place. And the attorneys are all in on it. And it just goes on and on and on. What happens to MULN? Same thing. What happens to MMAT? Same thing, except they were warned. But you know what? The board said, no, we're going to go ahead anyway. Idiots. What happened with MMTOP? Fraudulently, trapped shorts got it to trade from offshore. And Wagner doesn't want any record of it because that's a violation of privacy. I'm sure there's other examples. Root, it happened with Root. But then Root eventually comes back after a lot of dilution, a lot of stealing, a lot of people lose their money. It happened with Wolf. Wolf has finally come back somewhat, but then it was under pressure. I don't know where it is now. It's constant. It's everywhere. We know that, Pete. And the answer is you shouldn't. If you don't want to deal with it, you shouldn't buy any stocks. Just buy an ETF. Buy a mutual fund. Go invest in one of the SAC funds or one of the Citadel funds and collect 8% a year and let them cheat other people. But if you think there's a place that you can find that this doesn't go on, you're not going to find it. So what's different about Railtown? Well, Railtown is a Canadian company, number one. So the over-the-counter computers, the selling computers who read all those headlines, they didn't factor in necessarily that it was in Canada. On the other hand, there's ways they can do hedging trades, and maybe they built that in. So it's a Canadian company, and up in Canada, small stocks, in fact, do have research. They do have trading desks, and they do have brokers that will recommend the stock to their clients. So it's not perfect, but it's better than it is here. Railtown has a value. You don't believe it because you're just not you, Pete. The whole it's the English language. Many do not believe it because the stock is down, and therefore the stock's telling you all you need to know. But if you realize that the shorts, it's like shooting fish in a barrel, and they'll do it every day. They'll do it for $500. They'll do it for $5,000. They'll do it for $250. They'll do it every bloody day until it stops working. But what's different with Railtown, many don't believe it because they just believe the stock price tells them everything. Railtown has a transformational technology in the middle of a revolution going on in AI. That's one premise. Others may say, it's just another GTII. Well, if we work with our emotions and we work with just watching the stock price, we're gonna make a mistake. If instead we take a pad of paper and we write down projected revenue, because the company, we know this, Pete, the company is in a prolonged period of time, I think caused by the ineptitude at AIP, but hey, AIP is much better than Railtown. All right, whatever. My opinion, those guys couldn't file a corporate tax form on time. That's not to say that their idea isn't brilliant. That's not to say they don't have 400 million in revenue. That's not to say that they weren't the key investors in the Constellation software juggernaut. They put up 25 million. Is now, well, I don't know what it is now, but it went to 100 billion using the exact same strategy they're going to use at AIP Partners. It's brilliant. But that doesn't mean a college professor, a university professor knows how to run a public company. Dr. Tom Core. Doesn't mean that. Doesn't mean he's dumb. Doesn't mean he's not a great guy to be the CEO. It just means everything took a long time. So while it took a long time, guess what, Pete? There's no buyers. It's shooting fish in the barrel for the shorts. There's no buyers. There's no information. There's no research. There's no buyers. And there's no buyers. But there's sellers and sellers and sellers and sellers. But the sellers aren't selling because they're hoping the stock's going to be a penny in January. I mean, that might be overall their goal when they establish positions. But right now, their goal, because there is no toxic financing, they know there's no hedge fund behind this effort, and they know the company is not going to accept toxic financing. Their goal is very short term. And we look at it every day. Oh my God, it's in the red again today. That's how we look at it. Instead of sitting down with a pad of paper and I'm not going to be negative. Everybody wants me to be negative. I'm not going to be negative right now. We know there's hosting revenue. And that's going to lead to 25 million over the next 12 months or 18 months. We know that TELUS could refer some of their business for hosting, I'll just say it's the same amount, 25 million. We know that. We know TELUS and Railtown have agreed to work together. We know that. The shorts don't give an F, but we know it. But we're looking at the price. We're going, oh my God, they're taking from me. They're stealing from me. Well, yeah, they're winning because there's no enforcement of the rules. And Dr. Tom Core took forever. I'm blaming him because he's the only safe guy that I can blame without getting blowback that somehow I'm being impolite to some group of people. But we know TELUS has hooked up with a brand new data center. It's in the news. We know it. That price isn't telling you that. So we know it. We know from this document that there's 120 million in hosting fees that can be moved over to TELUS. And we know from Dr. Tom Core, and I think he did an excellent interview, and I think he's a sharp guy, but we know that he said that's from 125 companies. We don't know the exact fee, but we can make some extrapolations. We could pick 100 million in shared revenue at 25%, or 200 million at an eighth. It gets hosting fees, 25 million. TELUS, we know from reading this presentation and also reading news releases and stories that TELUS needs that interface to successfully offer its data center to AI companies so they can host their apps so other people can subscribe and pay for it. So we know TELUS is going to do some number. It may be much bigger. I'm going to assume 25 million. I'm going to assume it's an equivalent amount. It's huge. They do 20 billion a year in revenue. We also know that AIP, they're so much better over there than at Railtown. We know that AIP has a strategy of collecting the best of the best AI companies who by definition are new, they're undermanned, underwomaned, under technology knowledge, underfinanced, underbanked. We'll collect those, we'll create a network, and we'll have a central platform they'll all use. They'll pay us a fee to be in our network, but our ultimate goal is to roll these up just the way Constellation Software did. We'll buy them at a discount. I read it to you the other day. They were hoping to buy them at 2x. That might be a little optimistic, but they'll buy them at a discount. They're private companies. They'll consolidate. They'll acquire them at a discount, consolidate them, and in their plan, then they'd go public. But now they're part of Railtown. Maybe Railtown will spin it off. But those companies, we know 160 of those companies were generating it again. It's in this document. And it was on the Twitter. They are generating 400 million in revenue. Pick a number. I'm going to pick 100 million. They'll roll up 100 million over the next 12 to 18 months. We know that the hosting and the roll-up can grow. but I'm going to leave that out. It's too speculative. We know that there's going to be the whole purpose of the network. And remember, AIP is much better than Railtown. Railtown, those guys can't do anything. AIP can do everything, even though AIP couldn't close their bloody deal for 10 months. So one of the goals was cross-selling in that network. It's a brilliant plan. There's now probably 200 companies. There's over 400 million revenue, but there's 5,000 end users. So there's going to be cross-selling amongst these companies that's going to increase that 400 million in revenue. But also now we go to Railtown, even though everyone wants to say that they're doing so badly. I think they're doing great. Railtown has Conductor and the other products. They're going to cross-sell to 5,000 companies that they have not a cold call, but not even a warm call, a hot call into. If they get to 10% of those companies, it's 500. Let's say they can sign enterprise sales agreements over the next 12 to 18 months, projected, with 5% of those companies. It's 250 companies, and the annual revenue they generate, I think is low, will be 250,000 on average per company. That's 62.5 million. I'm going to say cross-selling will bring in I'll say 25 million. I'm not going to use 62.5. 25 million. Then I know that Railtown has already announced some enterprise sales agreements to no effect. There's one with the London Stock Exchange. There's one with Uniserve, 3,000 companies. There's a few others. Hasn't had an effect on the price of the stock. Why? Because the sellers keep selling. There's no research and there's no buying. So we look at it and we go, oh my God. But for purposes of this, I'm going to say that Railtown does generate business from the announced enterprise sales agreements. I'll just focus on the 3,000 companies in the Uniserve. I'll say they get 30 of those companies. 30 of those companies at 250, I don't know why I'm using such a low number, 250,000 in annual revenue, 7.5 million. I'll call it 2.5 million from the existing already announced enterprise sales agreements. Now, we know that Railtown must, over the last 10 months, have developed a pipeline of deals that are ready to go or maybe already signed. Who knows? We assume, because we heard on the phone that the AIP guys are great, but those people at Railtown can't get anything done. We assume that there's nothing happening at Railtown with Conductor's revenue. I think that's a bad assumption. So what's a good number to pick from, let's say, the beginning of this year to now? That's 12 months. Let's call it 10 months. Would they have signed up in this pipeline? Could they have attracted 5 a month, 2 a month, 1 a month? Let's just say 1 a month. Let's say 10. Let's say they have 10 enterprise sales contracts in their pipeline. Again, at 250,000, that's 2.5 million. I think that's a pretty good number, but I'll just use $1 million. And then we can assume in the next 12 to 18 months, Railtown is going to generate from brand new sources, new enterprise sales contacts as word gets around, and the Canadian nativism continues, and the anti-Trump, anti-USA, let's stay in Canada, MACA, make Canada great, MACA, make Canada great again. If it'd probably be MAGFA, make Canada great for the first time. But anyway, just project for the next 18 months. Let's call it 12 months. 2 a month is 24. Let's just say 12 companies over the next 12 months come in at 250,000 each annually. That's 3 million. I'll call it 1.5 million. Okay, I'm not gonna include anything that Railtown might have going other than TELUS, although it's logical that Railtown might become the interface at other data centers. I'm not going to include that. I'm not going to include that Railtown gets any business out of the Middle East or out of London or out of any other major contract. Just going to stick with this. So, I come up with a target over the next 18 months, 12 to 18 months, of 179,500,000. And I think it's low. But it's a projection. It's a projection. Let's cut it back. Let's cut it back to 150 million. Let's cut it back to 150 million. Forward projection for some 12 months over the next 18 months. Forward projection of 150 million. Now, Langchain just traded at 80x. Soundhound trades at 35x of revenues. Many companies have been funded at 100, 105, 150, 175, 200, 250x. Because, Pete, we're going to be skeptical here because we know the Railtown guys, they don't know what they're doing, but the AIP guys do. So we'll be really skeptical here. We'll just give it a 10x multiple, even though multiples a year ago were 25x on average. And like I say, multiples now in this bidding. Let's start with this one, then we'll do a bidding war. 150 million times 10 gives you 1.5 billion market cap. Now we know that there's 225 million shares fully diluted, but we also rolled up stock, so we know they had to issue stock to roll it up. I don't think it'd go to higher than 250 million, but let's use 300 million. It's pretty obvious. That gives us the target of $5 a share. So Pete, I just walked you through, I discounted it, I cut back. These are revenues that are reasonable to project, but no analyst has done it yet. And we don't feel qualified maybe, but we look at the stock price at $29.61. But this is the value of the company at some point next year, probably in the first quarter. But we look at this and we go, oh my God, why are we even in it? They're going to keep selling. It's just going to get worse and worse. Well, remember, there is no hedge fund committed to destroying this company. There is no toxic financing. They don't need to enter into toxic financing, and this revenue is ahead of them at $5. Now, I discounted my numbers, but if you don't like that, you can take this and cut it in half, 250. Hell, you can just take 10% of that, and the stock's worth 50 cents. But anyway, that's at 10x. That's at 10x. What's going on right now, even though people have whispered that the Railtown guys don't know what they're doing, the fact is the Railtown guys had a vision, and they came together 6 years ago to solve a problem in the software industry. Using AI, and they said, let's be early. Let's be first. Let's get this done before the data centers are ready, before NVIDIA has the chip. And that's what they did. And so here they are. Now, it did get stalled by AIP. Some people blame Corey. I think it was the professor, but I don't know. I just pick on him because he's a white guy. Safe target. But also, I don't think professors know how to do things under the gun in the regulatory world, the run a public company world, deal with attorneys world, you know. So my understanding is Railtown has agreements with Microsoft, NVIDIA, AMD, and there is a arms race to acquire first-in-class, first movers, and Railtown has solved this problem because they started early. No one else has, including LangChain. So what happens if Railtown does project 150 million in revenue? And there is an arms race. And someone says, like Microsoft says, we want to buy you. That's what I think is going to happen, by the way. Do they pay 10x? Well, maybe if they can get away with it. But if it's an arms race, They might be bidding against each other. So what if it's not 10x they pay? What if it's 30x they pay? It would be $15 a share in a buyout. Of course, that's not my $55 number. But if Microsoft won the bidding at $15, would you take Microsoft stock? But Pete, this is what's ahead. That's not what the shorts are considering. They have computers set up to read MOU, to read acquisition, to read Canaccord, to read LOI, to read negotiation, to read weeks, and they just start selling. And it works. But it's temporary, Pete. We don't have to be pussies. We don't have to be fraidy cats. We can say, we know this now. We understand this now. We knew there was a chance this could happen. We bought anyway. Now, and I apologize, Pete, because I actually thought this would happen, but I also thought that the upside would come much sooner. So I'm sincerely apologize. My timing has been completely wrong. But it's wrong by what? 5 months, 6 months? If you go back, it maybe say it's wrong by a year. Let's say it's wrong by 14 months. It's awful. It's awful to be that wrong. But they've been building this company for 6 years. The AI 2.0 hasn't gone away. Software development 2.0 hasn't gone away. The hundreds of millions, as evidenced by Ward just said, Microsoft is pouring billions into Canada, and IBM just bought that other flop house, I forget what it was called, for 11 billion cash. Money is still pouring into this revolutionary technology. What James Altucher calls the greatest wealth creation opportunity in 150 years. He's very promotional. But he thinks the wealth created by AI 2.0 will make the wealth created by crypto seem a ripple. No pun intended. I don't even know what a ripple is. So what we can do is look at this and ask, why are we even in it? And if they can just keep selling and selling and selling, why are we even here? We can ask that. Of course. But we can counterbalance it by there is no toxic financing. There is no dedicated hedge fund set out to destroy this company. The company doesn't need to raise capital and therefore is not vulnerable to toxic funding. The company is in a period of time where they can't talk about anything, but that's going to end. It's not going to last forever. The company just acquired its own revenue stream in the form of acquiring AIP for fewer shares than were announced, so that the hosting revenue alone will come in at 100%, $1 million, $2 million a month. May not start right away, but it's what. So they're not going to need to dilute themselves to survive. The company principals own the exact same shares we own, almost 20 million each. Marwan and Corey, same shares we own. They're so cheap on overhead, they work with 3 workstations. So they have no need to spend a hell of a lot of money. This company is, my opinion, you may not agree, but we have no evidence to the contrary. None. Just emotions. This company is first to market, first mover, best in class, solving a huge software issue in the middle of a $300 billion a year spend by corporations worldwide to upgrade their software. $300 billion. We know there's an arms race. There never was an arms race to acquire companies like GTII. There was never an arms race to acquire companies like Vocal. There was never an arms race to acquire companies like DataLogic. There was never an arms race to acquire companies like GDC. There's an arms race to acquire first movers and in this case, best in class. But we don't know about it yet because they bought AIP and it's gone on for 10 months. So what goes on when the cat's away? The shorts slay. And you know that. We're big boys, Pete. You and I are big boys. We know that that was always a risk. But why are we here? My opinion, we're here so we can replicate what that private equity channel is doing to LangChain. We're here at a pre-seed valuation, hoping to get a series around B valuation in the short run, $5 a share by the first quarter, and then hoping it goes through rounds C, D, and E, and then it floats or goes public or is bought out. My target's $50 a share. But it might not get that high. You know, there's a lot of human beings that have to make decisions. Why are we here? To make 100 times on your money. That's why we're here. To make 100 times on your money. Not from this price, from the price you paid. Whatever you paid. I think my average is close to 36 cents. I think, I can't remember. I've said it before, but whatever it is. So in my case, to get to 100x, and it'd be tax-free because it's in my IRA, is go to $36. That's why we're here, Pete, to make 100 times on our money. Now, a lot of people will get out while the shorts put pressure emotionally here on them. And I come on every day to fight it. I get frustrated. I'm not a perfect spokesman. A lot of people are going to look at the price at 29 cents and say, yeah, Corey's a bad leader. His technology is expired. I heard AIP partners, those guys are good, but I heard these guys at Railtown don't know how to put one foot in front of the other. I'm going to get up at 25 cents. So I don't know what to do about that. That's human psychology, and that's what the shorts know works all the time. But in the case of Railtown, unfortunately, there's no research. But even the research that exists which is old, is calling for a $2 price, and that's before AIP. That's before really AI 2.0 became a blizzard. So we're in it to make money, Pete. That's why we're in it. They're in it to make money in the short term. It's a battle. But the difference with Railtown against all of those manipulated stocks, Railtown's a real company. Nobody's perfect. I think the acquisition of AIP was superb, but it took a long time. The company and its investors and any investors it brought in on the story can't buy stock until all the material information is released. And I know from the feedback I've gotten going live that the attorneys and the regulators are all fantastic, and they're going to end up doing a great job. But so far, we haven't been able to get any confirmation. So the stock is cheap. The buyers are missing. There are no buyers that know what's going on. And the selling continues and continues. And what would be the alternative? Never buying? Yeah, that's one alternative. Trying to get in stocks that we hear on Twitter are going to squeeze? That's another alternative. Putting our money into a bank? That's an alternative. I think silver is a great option. Or do we go, well, you know what? Railtown has such a compelling story. And if they had not gone public, they too would be a private company, and they'd already be in the hands of some investment banker and up the value creation trail like Lang Chain, and we wouldn't even have an opportunity to invest. So what are our choices? We have to invest in the markets as they exist. We don't have to invest in every stock, and we don't have to invest in every story. And that was my attitude when I first heard about the Railtown story, by the way. But then I got intrigued the second and third time, because I thought, last December, I'm not going to go through that again, but I think the logical company then to buy Railtown was Microsoft. I still think that. But in between, we got interrupted with AIP, which I think is fantastic acquisition. Fantastic. But believe it or not, a third party came in, studied AIP, studied Railtown, and judged that the value creation was 85% Railtown, 15% AIP. I don't know how they came up with that, but I think Railtown's worth a hell of a lot more than AIP. I think Railtown is a kick-ass company that is going to revolutionize software development. And I think Railtown is going to be worth $55 a share. But two things could interrupt that. One is some sort of market crash or something like that. Nobody can do anything about that. The background metrics. And the second thing is the company could be bought out early rather than later. And who knows? When a buyout offer comes in, maybe it's Microsoft, maybe they try to do a buy under. They try to buy it at $5 or $15 or something. And who knows? People might take it. But I still stand with my target of $55. But guess what? You don't need $55 from here. All you need is $33 from here to get 100 times on your money. That's why we're in it, Pete, to make money. And yes, in the short run, they can keep doing their algorithmic flash boy program selling back and forth, slowly walk the stock down because we're not buying. And nobody in Canada that knows anything is buying. But they will. They will come. The buying is going to come. As soon as the material information is announced, I don't know if it's one deal, two deals, three deals. I don't even know if it's deals. Whatever it is, whatever gets announced that satisfies the need for full disclosure, give it a day, 2 days, a week, the buying will start. Research will start. And then not only will you, Peter, and me too, we won't have a chance to buy it at 32 cents anymore. I don't know that we'll have a chance to buy it at $3.20 anymore. It's going to go up like it was, it's like the ski lift comes around and you're standing there trying to hover over the seat, and all of a sudden it comes around and it grabs you, and the next thing you know, you're 6 feet off the ground and trying to adjust. It's going to be so rapid, you're not going to believe it. But right now, all we can think about is the stock goes down, seems red every single day. And why are we even in the stock? And, I really do get it. I have to deal with it every day. I've come on every day. People complain every day. The tension is very high every day. I'm keenly aware that not only did I suggest this, I've been adamant that the stock is at any time going to be going up. And it's now, depending on how you want to measure me, it's either 3 months too late, 6 months too late, a year too late, 13 months too late. I've been completely wrong. If you listened to me last November, you're losing money. If you listened to me in June, depending on what you paid, you're losing money. Everybody's down. Everybody's losing money, including myself. But we can choose to back away. Oh my God, this is just like GTII. This is just like Vocal. This is just like Data Logic. We can react that way, understandably. We can react that, hey, I heard that the AIP guys are fantastic, but the same person told me that Railtown doesn't know what they're doing. Just hearsay, just not for nothing. But we could make our decision on that. We can make our decision on, oh, I can't take it anymore. We can do that. We can do that, as several people have. Or we can go to our own pad of paper, make our own list of revenues. We can Google what the multiples are. We can do some multiplication and then some division, and we can come up with a price target. And if, as I did the other day, my target I've said for a while is $55. If that sounds ridiculous, cut it in half. $25. That sounds ridiculous, cut that in half. $12. Sounds ridiculous, cut it $6. Anything's better than this. This isn't telling you anything except there's no uptick rule. There's no enforcement of the locate rule. The clients that do this are good clients because they generate a lot of revenue. So no one bothers to enforce the rules. And it works. Because retail only can buy once, they can sell 10 times, 15 times, 100 times. They can go back and forth. Why do we have high frequency trading in stocks under $5? If you don't have buying, why should you have high frequency trading? But that's what we have. So the point I'm trying to make, Pete, is this is the market we have. we can't change it. But in the case of Railtown, they did a fantastic acquisition. Absolutely fantastic. It could bring in 200 million in revenue over time or more all by itself. And there's a captured set of companies that they can sell conductor to. It is a brilliant acquisition. But what do the shorts do? What have they always done? They sell it down so you think it's bad news. And in your brain, not you, Pete, not you, many, we see the price. So those shorts must know something. They must have studied that news, and they figure it's not worth anything. Just the revenue from AIP's acquisition could be 4 or 5 or 6 times the market cap of Railtown today. It's insane. The price is wrong. Well, when's it going to turn around? I think it could turn around any day. And I would give a shorter term projection than I'm going to if it weren't for the holidays. Pretty much next week, maybe people will be working on Wall Street and Bay Street next week. But they'll stop probably at the end of the week. So if I had to guess, Pete, how much longer you have to feel the pain of this, which I apologize for, and I mean it. It really bothers me. These markets are terrible, and I should have been able to put this in my prediction. But I think we have to plan on January 15th for the stock to be I'd say between January 15th and February 1st, I think the stock will be between $3.50 and $5. And you're fair enough to say you've heard it all before. I mean, it's fair. But I base my projections on trying to come up with revenue projections and then giving it a multiple and dividing it by how many shares are outstanding, fully diluted. And even expanding that number of shares. And every time, every bit of arithmetic I do, I always end up with a number in the teens and the 20s and the 30s. And then, you know, of course, it's my opinion. I think I'm being conservative on the revenues they can generate. But every time I do that, the shorts keep selling, and therefore that price must be right. Which price is correct? The 29 cents or the 1.25 billion for Langchain? The 40 million for Railtown or the 1.25 billion for Langchain? It's all there, right there. But we don't want to accept the information that's in the public arena, the evidence. All we want to accept is the price. And that our accounts are down, which is horrible. Mine is too. But it's not permanent. And it's not fatal. It's not fatal. And it's probably not over with. They're not done with this. They love it. And they make money. Today, 89,000 shares, maybe they made $250. Or maybe this is a continuation of a trade they established several weeks ago. If they're short, if they're, I don't know what swing trading means, but they're more than day traders and less than long-term investors. But Pete, bottom line, I don't think CEOs, most people on Wall Street, I don't think I can change it. I don't think you can change it. It's the biggest argument to get away from stocks that the charm boys bring us. Occasionally, maybe one will work. But I believe the way out is Railtown. And the key is to not be shaken out. It certainly is disappointing that I didn't tell you guys to wait until the stock was 32 cents or 29 cents in the first week of December. But you never could have convinced me that it would be here like this right now. Never. I think it's so badly mispriced that when the awareness of the revenue projections and the awareness of the magnitude of the opportunity just in Canada is, and in my judgment, when people go, oh my gosh, this is first to market, this is best in class, and your product does that? I think the shorts will have no more power, Pete. I don't know when it comes, but let's say it's Mavericks. Comes in to buy 5% of the company. 10 million shares in the open market. Let's say it's Omer's. Let's say it's Omer's Ventures, but Omer's Ventures wants to have 10% of the company. They come in and buy 20 million shares in the open market. Or let's say it's some other fund that cannot buy right now. And no one wants to accept that. They think the stock price is reflecting buying demand. The buyers aren't even in the market. But no one wants to accept that. Well, if it's so good, they'd buy anyway. Why don't they set up their own fake funds or their own fake LLCs? I mean, if they know all this, how come they're not cheating and colluding and buying from offshore or buying through a nominee? Why? It doesn't make sense. Well, it does if they want to keep their licenses, if they want to stay out of prison, if they want to keep their profits, they want to keep their house, if they want to keep their mutual fund, if they want to remain CEO of Mavericks or Omer's, it makes a lot of sense. Because the regulators go after the longs. They don't go after the shorts. The regulators are in place to help the banksters, to help the 25 or 50 men that are doing this. But every time, every new stock, we're always surprised it happens. Can we be that dense? Yeah, maybe I am. I might be. But every time it happens, we look at the price and we say, oh my gosh, there's something wrong with this stock. Oh my gosh. Can they sell endless amount of shares? They're going to be able to drive it to zero? No, is the answer. They got to pay to borrow the shares. They got to pay to maintain the position. And even though they're cheating and lying and violating the rules and marking their tickets long when they should be marked short, they can't do it forever, particularly if the stock goes to $3. And then they're gone. And you know what, Pete? Believe it or not, there might be a short squeeze. I hope not, but there might be a short squeeze here. And if I were telling you that, and I'm not giving you all that it's going to squeeze. It's a 60 million shares short, and the float's 100 million, and insiders own 60 million, and the whales own another 30 million, and it's going to squeeze. And then if I were doing that, probably people would understand that story better. But I hope the hell it doesn't squeeze, because this is not a hot money investment. So we shift in the middle of buying it, or I did, thinking it's going to go to high numbers based. I didn't come up with those numbers because I wished it there. It's that Wall Street is paying for that right now. To put it as simply as I heard it, there is an arms race. People are paying for this. Look at Windrift. Somebody came in and paid huge multiple just for the president and a license. And then somebody else came in and bought the rump of the company for billions of dollars. And they got it all done in a weekend. This is the hottest place in the market. Gold and silver and platinum next year, mining, come January, that'll be the hottest place. But we're allowing these criminals to affect us. We watch it. We don't do the homework. Well, what if Railtown did the same revenue that Lang Chain did? What was that revenue? Well, the estimate was 12 to 16 million in annualized revenue as of June, and they valued that at 1.25. Obviously, the shorts are right. Railtown's not going to do that kind of revenue. But what if it does? Just from hosting, it can do 15 million. Just from one contract. I think that Uniserve contract could be worth 15 million. But we allow this. I don't know the answer. For me, the answer is, whenever this happens, I write down revenue projections. And I'm going to do it again right now. Revenue from hosting. I'll say they get to 150 million in shared revenue, and they keep 20% of it. That's from AIP Network. So that's 30 million. And remember, it's forward projections. They valued Lang Chain on forward projection of 12. Lang Chain hadn't even done that much revenue. So forward 12 months, starting. The company's going to be working through the holidays. Other people might not, but they are. I'm going to say starting starting January. So for 2026, forward projections. And once they achieve the hosting revenue, it's not coming back down, at least not for a long time, or until an asteroid hits Canada. All right, I'm going to say hosting from shared hosting from TELUS referrals. I'm just going to say 10 million. And you're going to say, well, where do you come up with that? Well, I actually think TELUS needs Conductor to attract customers to its data center, and TELUS's revenue is 20 billion. So I actually think TELUS's own referrals to its own data center using Conductor, it could be massive. But I'm just going to use 10 million. I'm going to say that over the next 12 months, Railtown is going to be able to cross-sell to the network, the AIP network, to the tune 5,000 customers. I'm going to say 10 million. I'm going to say new business we don't know anything about, and in the future, I'm going to say that Railtown can add 1 million a month. So I'm going to say 12 million. Over the year, they're going to add 12 customers or 24, whatever. I'm going to say 12 million, however it breaks down. That's all new. Everything new. I'm going to say that Railtown, the announced deals that didn't do anything to the stock price, already announced. We know they have a partnership in the Middle East. I don't think that's going to be much. They have this thing in London Stock Exchange. That could be significant. I don't think it'll be huge, but it could be something. It could lead to other business. They have the Uniserve, which is 3,000 end users. They have a couple others. I can't remember. But in any event, I'm going to say those announced ones, the ones that have already been announced, I'm just going to give it 1 million. And then I'm going to say Railtown future projected. The new is for what we don't know about, but it's already there, the pipeline. Railtown projected to grow over the next year. I don't want to go overboard. Let's just say I think it's going to be big, but let's just say it's 2 million. I mean, it could be tens of millions, but I'll say it's 2 million. And then finally, once the stock price is up, what's the acquire and consolidate number going to be? In the next 12 to 18 months, they have we know from this document that they pre-selected 3 to 5 companies. You'd assume they're good companies. We know that 20% of the companies probably are doing 300 million in revenue. But we also know those guys are kind of slow at everything. So let's just say they acquire over the next 12 months, they acquire 10 companies. I think they could be doing over 100 million. But let's not use that. Let's say 50 million. They roll up 50 million. And remember, that's the number they used in their projection, I think, from 2 years ago. No, it was 50 companies at 100 million. But anyway, let's just use it, 50 million. So that gives me a target revenue of 120 million. Now the multiple I would use in a buyout or in a if I were an institution looking at it, maybe I wouldn't go to the 90x of Lang Chain. Maybe I wouldn't. Maybe I wouldn't go to 70 or 60 or 50. Maybe I'd go to 30x. So I'll do 30x. That means 300. That means $3.6 billion valuation at 30x. And if you assume to acquire 50 million in revenue, they wouldn't issue, and it's only 2 or 3 companies, 5 maybe, they wouldn't issue a lot of stock, I don't think, because they'll do it at $5 or $10. So I'll divide it by, I'm going to divide it by 250 million shares, because I don't think they'd issue that much stock. That gives a target of $14.40. And I think I've been very conservative. For the forward 12 months, I assumed hosting revenue from the network of 30 million to Railtown. Hosting revenue from TELUS, which could be many multiples of that. I just said 10 million. Railtown's, whatever you call it, cross-selling, I put 10 million. I think that's very low. 5,000 companies. Railtown's pipeline, what we don't know about, but will be new announcements. I just said 12 million in enterprise sales agreements. And then the announced deals that have already been announced, I think it'll be much more than 1 million, but I just put 1 million. And then the projected revenue Railtown could get that they don't even know about yet, I just put 2 million. I think that could be so much higher. And then to acquire 10 companies, only 50 million, I think this number could be 100 or 125 million, but let's use 50. So I get to 120 million. I use 30x. $3.6 billion. I divide it by 250 million shares. There's currently 225 million fully diluted. And I get 1440 as a target. that makes me feel comfortable looking at the stock price at 29 cents. Now, I could say, even though I believe hosting could be 50 million, even though I think the Telus hosting could lead to 100 million, even though I think the cross-selling could be 50 million, even though I think the new business with Railtown could be 25, 50 million, even though I think they could roll up 100 to 150 million, I'll take this and I'll cut it in half. That's $7.20 target. And that makes me feel good about looking at 29 cents on my screen. Now, this is just writing on my pad. I agree. But there is no research I can read. So I have to be my own research, have my own reason for being in the stock. What is my projection? I believe that Corey and Marwan have done an excellent job and have built a revolutionary, transformational solution to software development using AI and agents. And it's vertical, which is a big difference than LangChain. So I think these projections ultimately are low. Now, what happens if they get to 120 million in revenue and one of their best customer partners is Microsoft? What do you think Microsoft does if there is an arms race and they project, let's screw all of this analysis. Let's go another direction. We know from third party that software spend, Corey said it in his presentations, it's been in articles, that the software spend annually to develop and improve software and to keep up with the Joneses is going to be $300 billion. We know from this research, Capital Research, of course I can't find it now, we know that they're projecting penetration of 3%. So let's assume Railtown penetrates that 300 billion by 3%. Without Microsoft. That's 9 billion in revenues. If you're sitting at a Microsoft acquisition desk and you see that the annual spend is 300 billion and you assume a 3% penetration, it's 9 billion in potential revenues if Railtown does it themselves. But remember, you're Microsoft. And you say to yourself, I bet, we could get 10% of that market. Well, that becomes a $30 billion revenue number because of the Railtown acquisition, but it's with Microsoft's backing. So what would you pay for Railtown if you were Microsoft looking at those numbers? Well, number one, you'd look at how cheap could you buy the stock. Could you pay $10 to buy the stock, $20 to buy the stock? Sure. If the CEO sells, you would do that. But you know what you'd be willing to pay at a minimum? If you could turn Railtown into a 10% penetration of a $300 billion addressable market, because you're Microsoft and you already are selling to a lot of developers, you could generate and you could book and show your investors that you're generating $30 billion a year from that. Now, of course, it might not work, but Facebook spent $70 billion on Meta and it didn't work. So the question is if you sit down and see the addressable market, and you're the acquisition department at Microsoft at $300 billion, and you assume that Railtown, if you purchased it, you could generate $30 billion a year in top line revenue and growing for decades. What would you be willing to pay? Well, obviously, you're going to try to pay the lowest amount first. You might start with the number that Railtown on their own might be projected to get to $9 billion annually, which sounds ridiculous. But I don't think that would get a huge multiple, by the way, at that point. So you might be willing to pay $9 billion or $20 billion or $30 billion. Remember, $30 billion is what you think you can do with your own distribution system if you had Railtown. So what if you paid $9 billion for the company and immediately you absorbed it and you put it out as a mandatory a subscription or tool to your current developers, and you created $30 billion? You could buy the company for $9 billion and immediately show a gain and show how smart you are. 3x. That's one interesting thing you could think about. Another thing is if Railtown's on its own and it's going to work toward, with Conductor, getting 3% of a $300 billion market, that's $9 billion in annual revenues. Another thing you could do with that is, well, I'm going to take 10% of that. And that assumes Railtown would do $900 million in annual revenues. And you can start working with that. If you think that's too much, you can cut that down by 10% and just start with 90 million. But my point is, the revenue potential, the addressable market is so big that rather than look at the price that's manipulated by the shorts and, frankly, by an absence of buyers that know better, I wouldn't be scared of this price. It's awful. Now I'm talking to Pete again, but Pete, I hate that it causes you suffering, and I hate that your account is down, and I hate that I didn't tell people to buy it at 29 cents. But we're here now, and so my best suggestion is to buy more here, or at least hold on and turn off your computer until after the holidays. The last thing I'd like to see you do is if the stock goes to $1.50, that you sell out of it because you're feeling such anguish now that as soon as you double your money or triple your money, whew, I'm gone. Thank God that was a win. Because I think you'll regret it. I think you'll regret it. And I hate that this is going on. I just hate it. Now, I'm not saying a fair market wouldn't have sell-offs. I'm not saying that. Barrett Gold went down to $14. It's now $42. There's probably short selling there. Markets aren't always correct in their prices. So what you need to do is sit down and come up with a value that you think the company's worth. I have big numbers. Maybe you figure it's big numbers. Maybe you think all Railtown can do next year is $1 million. I don't know. I think that's very low. But all right, I'm going to move on. Pete the Gate. Yeah, I know. They are animals. They are animals, Pete. I agree with you. But they're doing it at arm's length. They do it with computers. And they figure they see what's the word? They see a loophole. They think they're clever. But Pete, when Railtown gets over $5, you won't have to worry about it anymore. Heck, I think when it gets over $2 or $3, if the momentum is there, you might not have to worry right then. But for now, it's like having, I don't know what, having, a rash, and you need to just deal with it, and then slowly it's going to go away. So Pete says no choice but to buy another 40,000 when it goes to 20 cents. No reason it won't. Let me address that. Yeah, I don't think it's going to 20 cents, but it could get close. Let me write that down. But Pete, you know what? There's no reason for you not to put the thing to do is to put orders in under the market. It might go off. And I agree with you. It might go off. I think it's probably too low a target, but you might be right. Just put an order in to buy, good to canceled, under the market at a price you like. I think that's a great idea, Pete. I really do. I think it's a great idea. Dirty Randy, hey, William, I'd like to hear your opinion on the I2I marketing group paid by Corey. I saw that. I don't know anything about it. I think there's several marketing agreements out there, and I don't know enough about them. You've got Rebecca Kurzweil, and I think her company is called, oh God, like, I can't remember. It begins with an S or something, something very elegant, feminine. I just can't remember it. Solina or something. You've got her company. You've got apparently there was a group out of London who was allowed to buy into the stock at a favorable price because they were going to market to family offices in Europe and the Middle East, and which is something I could do if if I got over to London, it take me, it wouldn't be overnight, but certainly could get it done. But I'm not sure there's been much to show there. They may be limited by the same uh, uh, full disclosure problem. Then there's a group who I think was hired in the United States. Maybe it's I2I. And then there's this arrangement in the Middle East, Bryant or something. I would say broadly, they could have saved their money. But I think Rebecca did a very good, very nice interview with Dr. Tom Kaur. The group who is apparently going to market to family offices, we haven't seen the end of it yet, so it might be too early to judge it. The one in the Middle East, I'm not sure. I'm skeptical, not because they're bad people, but I did a lot of things in the Middle East. And a lot of it's just talk, and not everybody's effective. But anyway, that has a lot of upside if it works. But I don't know who I2I is. It's clever, I wonder what their short for butt to butt would be. Nose to nose. Bad breath to bad breath. McDermott, if what you say is true about markets, what makes you think this company or us as investors can win? The market is not for average retail. Well, I think that's true. I think what you should do, I can't see your picture, but maybe just buy an ETF. Let the people that do these games make the money and collect the fees. But I think this company's going to win, to answer your question, because they never entered into a toxic note. So the endless dilution is not going to happen. I think this company is going to win because they obviously have very low overhead. So it implies to me very low salaries. I should look that up. But I think the principal players, Corey and Marwan, each own, almost 20 million shares. And their interests are firmly aligned with ours. They're not going to dilute those shares. They're not going to enter into a toxic note. They're not going to have their company destroyed. Now, you could say, well, what about Jeremy? What about Brent? What about these other CEOs? I don't know what to say about all those. But in this case, you've got a company that has created a product that is the first mover, best in class, in the middle of a revolution in technology where hundreds and hundreds of billions of dollars are being directed. I think they'll make sure they're rich, which means we'll make money. I do not think the shorts in this case are setting out to take the entire market cap of Railtown. they've already taken it down by 30 million or so from a reasonable number, but it's not over. They're just doing day by day pickpocketing and maybe extending it a little bit, and they're hoping for a year-end collapse in the stock, but I don't think that's going to come. And I'll get to the gentleman's question. I just want to go through all these. Ah, darn it. Nothing ever works. So the volume in Canada that I see, 146,000 shares. It's a lot. It's a lot. I think we're going to win in Railtown. I don't think investors can win in the other stocks. And I really don't think people should play any stocks that are in the space that we've been doing. I mean, it looks like a couple of the stocks had nice rallies, like Wolf or Energy Vault, but that's one or two eventually out of 30. And I just don't think people have the ability to trade these. They are trades, they're not investments. This is an investment, this isn't a trade. And I think we're going to make a lot of money in Railtown. Dirty Randy, this is real selling, and Corey's buddies at Canaccord are covering. We were misled. Well, I think Canaccord, Corey may have friends at Canaccord, and his broker, let's say it's a broker or banker at Canaccord, may not know about shorting. I really mean it. I ask. I used to know a lot of people. A lot of them, lost touch or they retired. But I asked everybody I knew on Wall Street, and I was, knew a lot. And nobody knows about this short selling. So I wouldn't be surprised if Corey's banker at or broker at Canaccord has no idea about short selling, none whatsoever. And in fact, in his department, he may have compliance breathing down his back. But you're right, other parts of Canaccord and other brokerage firms in Canada, they process trades for Anson funds, for other funds out of the United States, out of Germany. So the shorting does go on. Oh man, Rick Rule. Eric Sprott, either started or is on the board of a association up in Canada. The whole thing is to stop the shorting. Canadian, and I've experienced it. Canadian stocks do get shorted, so they have to sell it somewhere. And I think Canaccord is one of the notorious processors of shares sold that have not been located and are not delivered. Canada's rules are probably slightly different than the United States, but I don't think anybody fully understands the rules. So yeah, I think Canaccord could be processing short stocks and lending stock out. I think it's totally possible, but I'm not sure that it's anybody Corey knows or anybody Corey may talk to. That's one of the biggest risks. And you might have tried it too. I've tried to warn CEOs and talk to them. But one of the biggest risks is they end up talking to or believing their representative at the brokerage firm, and it's a completely different department. It's a completely different channel. And so they go along and then they get screwed. I don't think that's going to happen here at Railtown. I don't know if it's because Corey, I've never spoken to Corey, so I don't know if it's because he understands the short selling or not. I just think we got lucky. Corey took his company public and then took his company down to the over-the-counter markets to raise money. And in the meantime, the markets got hot for AI, and then he bought AIP, and thank God he didn't raise any money down in the United States. Otherwise, this stock would be 5 cents or a penny. So I think we got lucky, but let's trade off of that luck. I think the company doesn't need any capital. They're not going to enter into a toxic formulaic note. And I do think, Dirty Randy, that the process of creating investment banking products at Canaccord, I think it's backed up by short selling, and the hedge funds. It's all over Wall Street. It's all over. No one actually does road trips anymore. Nobody actually has clients they call. They just call the hedge funds. And so that's why when the computers see an MOU and they see Canaccord, they start selling because they figure they're going to get a phone call from Canaccord at some point on an offering. The whole thing is disgusting. Dirty Randy, it's bullshit, but I think we're at the bottom. I'd buy more if I had cash. But God, you're a good man. A good man's got to know his limitations. If I had cash, I'd be buying right now with both fists. But I've got to pay. Actually, I forgot to ask people, and maybe I'll put it up, but I got to pay. I got a lot of bills to pay. This is going to turn off if I can't pay it. My phone is turned off. And anyway, let's not go through it. Everybody's got their situations. But yeah, I can't buy any more stocks. So I actually understand the reaction that your account's down and you wish, but nothing, you can't ever get it. You're never going to buy the bottom and you're never going to sell at the top. You just want to get 60% of the trade. If you're lucky, you get 80% of the trade. But I don't think Railtown is going to be a trade, believe it or not. I think Railtown is more likely to be purchased by Microsoft within the next 6 months than the stock's going to be around in 18 months. But that's a really wild ass call, isn't it? But that's what I think. Edward Barona. Yeah. Please stop with these excuses for a garbage stock, at least for the New Year's. Oh, Lord. Edward Barona. Weird. Sounds like a familiar name. Sounds like a familiar name. No, just sounds like it. This is nothing new with this man. Check his record. All his mentioned stocks don't go nowhere but down. Well, by definition, if you're listening to me, the markets are corrupted. The charm boys come to get some buying in, so the computers start buying, so that the so-called IR agents can sell their stock at a profit and move along. And so, of course, the system is they're always going to sell the stock down. And yeah, that I don't agree with you that every stock hasn't worked. I also don't agree with you if you listened, for example, to him when he recommended GDC at 70 cents and you decided I'm going to punt because that's all it is. It's a gamble. And you bought some, you waited whatever it was, 90 days, the stock went to $8 during regular hours. And you got out at $7. That's a nice trade. But if you listen to the rest of the bullshit that it's going to go to 150, and then right now the stock's 8 cents, well, then that wasn't good. But you should know I didn't recommend that stock, but whatever. So, Edward, the key is, are you in it for a trade or as an investment? Railtown is not a trade. Railtown is away from you guys. And make no mistake, you're part of the corruption. So it's weird that you're the one shorting everything, destroying markets, and you come blame me. Why don't you go look in the mirror? Just try not to look at your never mind. Justin, I forwarded an email to you from Yahoo talking about a competing comp that is public, but okay, I'll look it up. Justin, I'm not sad about the market cap today. It's in line with our understanding that we're waiting for numbers and revenue, but it will drop below 20. I don't think so. You know, just when, I mean, there's the old saying, it's always darkest before it goes totally black. But it's weird. Jim Cramer wrote about it. But just as you give up, just as you feel like, oh, God, I'm sick of this, and the professionals go through this too. They do. And you think the stock's going to go to 20 cents. This can snap just like that, Justin. It really can. It can, I'm not saying it will, but it, with a research report that means something. I don't know about this capital research. Or if finally the full disclosure happens, and let's say 72 hours later, institutions decide, okay, we're going to buy. My problem with all of that is I think there's going to be ghost staff at all these firms. So, while Dirty Randy is shopping for Christmas presents, I don't think many people are going to be at work at Bay Street or Wall Street. So I think it might be January, but it could happen. You don't know, Justin. So just as you start thinking it's it's going to get worse, it can turn around and snap. You'll find out. I hope it does. What do you mean you don't have heat in your apartment? Well, I got a space heater right here, but I don't have heat. um, the the landlord is a bit of a, I don't know. He's difficult, and the heat's turned on from the basement, but apparently he put one of his friends in the basement, which is not livable, but he put a friend in the basement for some sort of storage or something. But it's also to get around the rules, he thinks, because he's trying to sell the building. And tenants have a right to buy the building, although I might have forfeited mine. I don't know how it all works. But anyway, downstairs is locked. I never knew how to get in anyway. And so the heat has to be turned on from the basement. And my last interaction with the dude wasn't good. So I'm just dealing with it. I just wait to get through, get through to, I don't know, when will it be warm? March? It's frustrating. Thank you. Dee is supporting Railtown, and I appreciate that. Who's this? He's making you all bag holders. Ham and him? Ham and him? Ham's not involved here at all. And it should be he. Or it, yeah, and then Spike should have a S on the end of it. The stock for today, I believe it's going up. It started with GTII, ZJYL, Finger, DJT, T-Low, and many more. Look, dude or girl, I was pretty excited by Finger early on because it performed so well. And I also, I don't want to go through it all. I also thought GTII had the potential for squeezing. But oddly, the one that I suggested to people to buy was Finger. GTII I was very reluctant on because it was a piece of crap stock. But it started to work, so like any other human being, you get caught up in it. But I did think, based on my experiences, that there would be buy-ins on Wall Street. But I've gone through it, and I'm not going to go through it again. The rules changed under Bill Clinton. They kept pushing the changes in everything, just like the incremental other example I've used before. And so now we have a situation where it's actually you guys that hire people like Ham. And I don't know if Ham knows it or not, but as the stock goes up, you start shorting it. So it's really your game, not mine. T-Low, I went and visited the company. It's a great company, but I never recommended buying it. I do like it. And I have talked about going to meet with a guy, but the CEO died. And it's a tragedy. They took the same stupid financing. But DJT, I never recommended. This ZJYL was, anyway, look, they're all crap. And I want people to get away from these crap stocks. You want to blame me. I'm trying to pull people away And yeah, I got fooled by your games right at the beginning, but I'm not fooled anymore. Ward Richardson says thank you to D. I agree. Pat M., why don't you just go? We're all fine. Pat says that's for whatever that name is. Richard K., is this another counterfeit share situation? Is there a lot of shorting going on? I think, Richard, that the last numbers I saw from Tom Rock, which are old, they're about 90 days old, it was something like 52 million shares sold short. Counterfeit, don't exist in the United States. But those numbers, when I read The Great Taking, there's a difference between what you short during the day and what you reconcile at the end of the day. And you can just offset. I'm not even sure you have to have trades. So anyway, that 52 million might not, it almost certainly is not the net short number. And it doesn't necessarily reflect the arbitrage between the Canadian price and the Canadian dollar and the US price of the stock and the US dollar. All done at lightning speed with high frequency trading, which I don't know why they allow it to happen on over-the-counter stocks. So anyway, yes, there is the selling of stock that doesn't exist. You call it counterfeiting. Dr. Susan Trimbath calls it phantom shares. The Great Taking. David Webb calls it entitlements, whatever you want to call it. But yes, it happens in the stock. It happens in every single stock, everyone. The regulators and Congress, for some reason, have given short sellers permission to sell stock they don't own, and they haven't borrowed, and they haven't located, because it's good for the markets. I don't know why, but yes, it happens. Do I think there's a lot of shorting going on? Yes. Right now I do, yes. But I don't think it'll go on forever. And I think a lot of it could be arbitrage. We don't know. Tom Ronk doesn't know how many shares are shorted in Canada. So it could be the total number is Canada and US. It could be 10 or 20 or 30, 40 even million shares short. So there's always a potential that if the stock starts to really rally, there could be some buying from those sources. I hope not. But yes, I do think. Now, when you say, is this another counterfeit share situation? This is not. All stocks in the over-the-counter and NASDAQ get this kind of treatment. All of them. If you're under $5 and you need capital, which is why you're public anyway, you're going to get destroyed. But where it really happens is when retail comes in and there's buying. That's like prey. They see it and they go take it. So any stock that starts going up and retail's buying is subject to this, yes. But it's not another counterfeit situation. All stocks, every single stock on Wall Street is structured so that your broker holds it in street name at the DTCC, and then they can lend it out at will. They can use it as collateral for derivatives. All they put in your account is a security entitlement. So it's not another, they all do that. But if you're implying that Railtown is another GTII, another, G-Bucks, another COSM, no, it's not. It's the whole difference is Railtown shouldn't be public. It should have stayed private. But I think they raised a little bit money. But ideally for Railtown, they should be private. They'd already be worth $1 billion. They wouldn't have the filing requirements. They wouldn't have all this nightmare delays. They'd go into Sequoia buy the whole company from them. But we're public. That's lucky for us. Don't you guys see it? We are, by a series of coincidences, maybe, we are able to buy into a company, I believe, that should be worth $1 billion today in a private equity channel. We're able to buy it right now in the public market because it's public. We're able to buy a pre-seed valuation, a seed valuation, because it's public. The bad thing is they have to follow public rules, which is buyers can't buy while there's not full disclosure. They can't talk about things while there's not full disclosure. They had to wait till the AIP deal got, we know all that, right? So it gives us a great opportunity to enter into a company that's better than Langchain at a $40 million valuation. We never get that chance. What do we have to pay for it? Time and this bullshit of up and down crap. But the up and down crap is not going to last very long. This down, down, dive, 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 it's not going to last. Unfortunately, we've got the holidays. And I don't know what to do about that. Should I call Santa Claus? Get him to change it? We just got to deal with what's ahead of us. But when it turns, Richard, when it turns, you're going to find out this is not another counterfeit situation. When it turns, and Justin's going to find out too. And I'm not picking on anybody. You guys have never seen it before, but you're going to see it this time. I just hope you don't get out. Which guy was saying it? The point, this is from I'm Almost Legend. The point someone made about the stock dropping more, could you give a non-frustrated opinion? Yeah, the reason I haven't brought up a chart to show you, I don't want to lose any comments, but yeah, any stock can go down. And I actually think the chart doesn't look that good. Although I don't see how much lower. I mean, you're at the point where there's not much lower on the chart. But on a percentage basis, when you're at a small price stock, percentages, pennies are huge percentages. Yes, the stock can go lower. It is relentless selling. These guys don't have to own the stock, so there's no limit to their selling. They don't have to deliver the stock, so there's no limit to their selling. They don't have to disclose who they are, so there's no limit to their selling. They're using somebody else's money as their wad, so they don't have any personal risk. They have attorneys that'll protect them if anything happens. They collude with each other. There's no enforcement against it. So, yeah, the selling is nonstop. The selling will stop when the stock price goes up. And you're going to say, well, how can that happen if they keep selling? It will happen when buying comes in. And we're not enough buying. I don't think the buying in the United States moves the stock price up because they always do let our buying go in below the ask. Obviously, the ask is a moving target, but I think the US stock price is keyed off the Canadian market. Now, today, the number of shares traded in Canada is 148,000. I would have to guess that some of that's real selling up in Canada. You've got the reason you sell is you're sick of it. Another reason you sell is you need the money. Another reason you sell is for tax losses. Another reason you sell is to pay for exercising warrants, for example. So there could be real selling there. There last week, 2 weeks ago, there was a guy that got into a margin call problem with other positions in his account, and they sold out his, that's what I heard anyway, they sold out his Railtown because not because it was on margin, it's not on margin, but it's cash for cash. You get 100% credit for those sales. So anything like that could be happening, and it can happen at any time. The low in Canada today was 39 cents. The high was 43 cents. But that's a lot of volume for Canada. No, it isn't, actually. It says the average volume is 154,000. And it closed flat, I guess. It's what it shows, at 42.5. So you could have had forced selling. You could have had impatient, fed up selling. And you could have year-end tax loss selling, and that's always a risk. But I don't know. I didn't watch it in Canada. In the United States, we had volume today of 89,000, not very much compared to Canada. But I would say of that selling today, I think it's all fake. It's always on the bid, always having to get out. I think it's manipulation. You know, the last trades I see, the last trade of the day, 1,000 shares at 29.61, 1,000 shares at 29.41, 287 shares at 29.38, 1,000 shares at 29.83, 2,000 shares at 29.79. They're trying to break it down, and they want to get an air pocket, and maybe it goes. And I said it the other day, I think yesterday, that I thought on the chart, which I'll show you if I ever get through these messages, that I thought it could go to 27.5 in a spike. And I think today's low was 28. I don't think the chart looks good at all, but I think that's an opportunity to buy. And like I told the other gentleman, maybe you'd put an order in under the market, because they're going to try to, as long as news doesn't come out that, and by the way, most good news that comes out, they'll sell. As soon as it comes out, they'll hit it with selling, because they want you to believe, it's not great news. The only thing that's really going to change this trend is buying. And the buyers in Canada cannot buy because there is material, non-public information that needs to be disclosed. And I don't know when that's going to end. It could end tomorrow. On the other hand, it could end, if they're waiting on TELUS, it could end in 6 months, So in the meantime, these guys, the path of least resistance. Here's the guy, typical guy. He goes in and he's renting the computer, renting the place in the bucket shop, and he has a budget, whatever it is, 5 million, 10 million. It might be less, a million. And that's put in an account, and he can use it to short. And he starts shorting, he day trades this stock, or he swing trades this stock. But he's trying to create money out of nothing. So when he enters a sell, he doesn't own any stock. Now, he's not doing it physically. He's using a computer, and he sets up a bank of computers. And I've told you some of the triggers. These computers read the headlines. So anyway, if he comes in to see a situation like Railtown, and he knows what all his buddies are doing, he's not going to come in and buy stock hoping it goes up and sell it up. Because the odds of that working is very low. Now, some days it does work, but most days he knows with a stock that doesn't have any buyers, sell. Just sell. Just sell. And I don't know if they set up the computers to tag off of Canada, but they can be doing this selling for, just tiny bits of price difference. And it's profitable. So the best way for him to make money out of thin air is to sell stock that doesn't exist. Do it every minute, every 10 minutes, every hour, every day. Do it with his buddies, collude and cheat together. Because eventually the buying, and you'll notice some days people come in and it goes up till 10 o'clock, and then at 10:15 they start selling, or 10:30. Because they know that retail, even if retail buys 50,000 shares, they can do it once. They know that. But they can sell that 50,000 shares, even if it's going up, and then they can spend the rest of the day trying to sell 50,000, 100,000, or the week down, 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 down. And they don't have to make money on every trade. And it doesn't fill them with terror and horror when the market goes against them, because they have a system. Their system is to use computers to sell stock that doesn't exist, and the path of least resistance is ever downward. Now, lots of days it ends up in the red. They'll collude, they'll manipulate, they'll spoof, which is illegal, and ask price below the last trade, just so everyone's scared. It's a game, and we follow it, and we try to. I'm suggesting to you, we shouldn't be watching this price. We know that the stock is worth more, and we're obsessed with the price, of course. We all are. I do it. But the price is meaningless. We know it's manipulated. We know what they're doing. Good on them. Good for them. I don't want to fight them. There's no way to win. But I do want to own this stock. And they're not going to destroy this stock. The research I have here is a year and a half old, so it doesn't really matter. But as soon as a research report comes out and is able to project, and it might be January, by the way, but as soon, and the shorts know short selling's coming. They know that accounts might be forced to sell. They know investment advisors might tell their clients to sell. They know that emotionally people are frustrated and they're just going to say, screw this. I think this is a time to just get plumb dog mean, because that's the only difference between living and dying. We just got to get mean here. Hold on and buy more. We know the story, but yet we try to read this like it's a tarot card. We know they don't have Jeff Easton. They don't have Kurt Kramer, Ari Rubenstein. They don't have that. They don't have the Toad. They don't have Anson Funds. They don't have any of it. But they have these opportunistic shorts that have a system, and it works. It constantly works. Every time a stock goes up, they sell it down, and retail is constantly, they blame the CEO, they blame me, they blame. It works like a T to a T every single time. And then retail gives up and says, oh, I should never have bought over the counter. And it sucks, because the over-the-counter should be a better market. NASDAQ used to be the best market. But we got to live with what we have. And I think I'm almost legend. I'll pull up the chart from yesterday. I just don't want to do it. I don't want to lose comments. I think 2750 was by memory, that was a clear support. And to my memory, that's why I want to look at the chart, I think 24 cents is the absolute worst. But I'll look at the chart. I didn't want to say that number until I looked. And so we're very close to that. So is this an opportunity to sell to avoid it going to 24 cents? I don't think so. Is it the end and that the company is going to go bankrupt? I don't think that either. For some reason, even though it's been published as a press release, and for some reason, even though it's in the deck that I've shown many times, we cannot absorb. We have no ability to absorb the fact that Railtown closed the AIP deal. Now we think, well, that means the stock will go up because it's great. And we think, well, the stock didn't go up, therefore it's bad news. They know that. That's why they keep the pressure on. They want you to give up. But you got to ignore that. It's like watching the devil. It's like listening to the devil. You can't do it. But you can recognize, I think each of us can recognize, that Railtown closed the acquisition of the AIP network partners. Now, in and of itself, that's not a lot of revenue. It's not, it's like an association. But we also can recognize that they signed an agreement with TELUS. We don't know a whole hell of a lot about it, but we do know it's a revenue sharing deal. And we do know from pictures, if we don't want to read the words, we know from pictures in the presentation, the investor presentation, that it involves putting Conductor as the interface to the data center to bring in customers. We also know, both from a interview, and we know from this same investor presentation, it's $120 million in annual spend that's going to be moved over to start with. Now, it could take a while. It could be in stages, but it's 120 million. If it's 10% split, 20% split, big number. We know that Lang Chain's gotten a big value. Okay, we know all those things. But we look at the stock price and we say, oh my God, it's going to zero. The stock price is lying to you. But you won't have confidence in that unless you believe that the AIP acquisition all by itself is going to bring in 20 million to 40 million in revenue, visible revenue at 100% margin, simply by moving 200 companies hosting over to TELUS. Well, it's going to be expensive. Okay, it might be expensive. Well, it's going to take time. Yes, it might take time. Well, they might, not everyone might go over. Well, that's certainly possible. But it's a Canadian ecosystem. It's a Canadian data center. The government is emphasizing keeping Canadian know-how and Canadian AI in Canada for Canadians. So the most likely thing is Canadian telecom companies are going to move their business to the Canadian factory. So is it going to be 40 million? Maybe that's too high. Maybe it's going to be 30 million. But it's real revenue. The whole market cap of Railtown right now is 40 million. Visible revenue simply by hosting. I guess I got to show it again. I mean, you know from the press release, there's going to be shared compute, TELUS and the AIP, because of you know that. But you also know from this presentation that 120 million is going to move over. We know from the interview with Dr. Tom Clore that he said that's 125 companies. We know there's approaching 200 companies in the network. So it doesn't take a lot of imagination to think that maybe 120 million does in fact move over. The percentage is harder to come up with. 20% is easy arithmetic. I think 30% is too much. So 20% would be $24 million in revenue. We know that. All right, well, maybe it's not, if you want to say it's not going to be 20%, maybe you say it's going to be 10%. I think that's too low. I don't think they'd enter into such an agreement. But then that'll be 12 million in revenue. Maybe it meets in between, you know? Maybe it's 18 million in revenue. Not 24, not 12. Maybe it's 18 million in revenue. Pick a number. But that's real revenue, and we know it. If I can be simplistic and call it 20 million in revenue, 1 year, the company's going to bring in cash at 100% margin, 100% profit, equal to half of its current market cap. Does that make any sense? Of course not. So we get a chance to take advantage of that absurdity by buying stock. But we torture ourselves watching it each day. and saying, oh, I'm down, which I do too. I'm saying we, I'm not saying you, I'm saying we. And do I wish I had told you to buy the stock in December? Yes, I do. But that's hindsight. It's hindsight. But I do think the stock could go to 27.50, and subject to when I pull up the chart, I think it can go to 24 cents. Things can always keep going down. I think it can go to 24 cents. I think 20 cents is too low, but I liked Pete's idea. He'll put in an order to buy 40,000 shares at 20 cents. I would get it in, because if it happens, if it goes to 20 cents, I think it'll be one day. But, the stock price is trading in a vacuum. It's trading in a vacuum of information. It's trading in a vacuum of real buying. It's trading in a vacuum of professional buying. It's trading in a vacuum of Canadian buyers. It's trading in a vacuum of research. And soon it's going to be trading in a vacuum of anybody at their desks for the holidays. So yes, I think the stock can go down. But it might have gone down all it's going to go down. We don't know. It's already way down further than I thought it would come. So about that based on chart, it's good to know, because even though buying price may not matter in the long run, it's the funds we have. If at the moment, if I have 1,000, I'd rather buy at 25, 20, or 30. Yes, that's exactly how you use the charts. And I believe, I'm almost legend, that the chart has broken down. I don't see any support. I don't see any a short run. You're just talking very short run. I don't see any reason why it's going to bounce back at some point, although it could. All you need is a change in circumstance, and it will. But I'll bring up the chart and give you my targets. I think I'm almost legend. I think those three numbers you have here, 25 cents, 20 cents, and 30 cents. You might have seen the last chance at 30 cents, but my guess is you didn't. So the most certainty probably is 30 cents. But tomorrow in the morning, I think they'll try to get it to 27.50. So if you want to put an order in before the market opens at 27.50, I think that has a reasonable shot that they'll drive it down there. I'm not sure about 25 cents or even 24 cents, but I'll show you the chart. I think 20 cents is way too low, but anything can happen. Anything can happen, particularly if someone just gets so disgusted and just disgorges their entire position. Anything can happen for one day. So I guess another way of saying what I think is, unless some sort of news breaks, which can happen at any time, that means anything, which we don't know, or perhaps research, there's probably not a whole lot of urgency to not try buying it at the price you want to buy it at for the next day or two. But remember, the annual meeting is next Wednesday, and there's a good incentive to get news out before that Wednesday, and maybe get financials out, and maybe get, I don't know about research. It'd be great, they probably would think, but they can't control that. So each day that goes by, this can snap back very quickly. But if you're willing to recognize that, if you're willing to recognize that if the stock snaps back, you're not going to get this price again, but you'd like to try to get a better price. Put an order in under the market before the opening tomorrow. 28 cents, I think you might get. 27.50. That might be the bid, so you might not get it, but it might trade there. They don't owe you a trade if it's the bid. If it's the opening, market opening, they owe you that trade. I don't know. Let's look at the chart. I would say if you really want to try to get a good price, I would say 27.50. But we'll look at the chart. Maybe 25 will happen. Maybe. We'll look at it. Ward Richardson, Microsoft will have 19 billion invested in Canada by 2027. Wow. Is that because he's moving to Canada? Ward is saying something time almost legend. I guess that's a clap or an approval. Ward Richardson, I've been in this stock going over, wow, 2 years. My point here is that it's an investment, not a day trading stock. Exactly. I've been in it, I think next week it's 1 year. But it's in my IRA, so the majority. I have a negligible. Anyway, I'm not a big account anymore, but hopefully this will be the start. But I think it's been a year for me. But yes, Ward, I think it's an investment, not a day trading stock. I couldn't agree with you more. The day trading of this and the risk of day trading. Looking back, it's obvious we should have sold at 60, 50, 40, 30. But, I never thought at any one of those points of time that getting out and trying to buy back in made sense, because it didn't happen. It didn't happen. But, they could have closed one thing, followed with news, and then buyers came in. It didn't happen. It really didn't happen. Dave Vanderwer, agree, Ward. I've been in since July 24. Wow. Yeah, that's about when that research report came out. I think it was July 2nd of 2024. That's back in the day, that's how we would do it. A year and a half was not an unreasonable time to hold a stock. We didn't have these expectations to make 100 times your money in a week. We just didn't have that back then, and so we would wait and go on to other things. Unfortunately, Dave and Ward, here I decided, which in retrospect seems silly, I really thought it was important just to focus on Railtown because I thought the time frame was so short. Looks like we had plenty of time, but anyway. Wow, Neil, good for you. Another 22,000. Neil. Wow. That is a huge position. 418,000 shares. That's awesome. That is awesome. That's a huge position. I'm very happy for you. There was a day I could have done that too, but maybe there'll be a day in the future. But that's fantastic. That is fantastic. Congratulations, Neil. Giuseppe, I noticed around the time of the interview, Rebecca got active on Twitter. I thought, great, they're going to tell their story and release material information. Yeah, but Giuseppe, if you listen to her interview at the beginning, she made it clear, I think, I'm trying to remember, but she didn't necessarily have direct information. She's not an insider. I'd have to listen to it again. She has her own IR firm, and I think she interviews a lot of people, and I think she probably gets shares. And she's going to do very well. I think she interviews well, and I think we're coming into a period of time where mining shares and oil and gas shares, Gulp uranium shares are going to do well. And she's up in Canada, so I think she's got a good future ahead of her. She doesn't look like a drinker, and she's young, so I think that's going to be appealing to a lot of executives. So I think she's going to do a good job. But she's an IR firm. She's not necessarily an insider. And I think that's what she said. But suddenly silence again, maybe there's a good reason. I think part of the silence is possibly, in the real meaning of the word, it is a quiet period. It is earnings season. But I looked last year, they didn't release their September numbers until January. So on the other hand, it might take till January. But we'll find out. That would be a reason to be quiet. I do think, Giuseppe, that the annual meeting is requiring a lot of attention. They, again, I think Neil's who said it. They have 3 workstations. So, you know, I'm sure they're working diligently, but it's not like, you know, they have a battery of executives handling everything. And then, you know, maybe they're going to try to create a presentation for the annual meeting. My guess is the annual meeting is just going to be, we don't know, but it could be just Anne Marie comes in and, oh, there's somebody named that. I just made that up. But let's, you know, the executive assistant, Anne Marie, comes in and there's a tape recorder there. There's maybe a witness or a guard at the door. And you know, maybe Corey comes in and maybe there's one of the board members there. And certainly probably Paul Woodward would be there. And the executive secretary, I don't know why I made it a woman, but whatever. Anna Marie brings up the votes, calls it out, and Paul would say, well, we have, you know, whatever, you know, 125 million votes in favor, 10 million against, and you know, 25 million abstain. Or, well, actually, it wouldn't be that much because some of those aren't shares. But you get the point. And they'd read it out. They've already got it pre-counted, pre-collated, and they'd ask, are there any other votes? And having a majority, the question passes. I go down to the next one. And after about 15 minutes, 20 minutes, well, thank you for coming. And they go, Paul and Corey go out the side door. You can't follow them. And the guards there at the hallway door, which you can go out, you walk out, the door closes behind you, and you're, why the hell did I come? That's probably what the annual meeting will be. But that doesn't mean that he won't want to get some news out if he can. But he may not control it, Giuseppe. This is a frustrating thing. Some news needs regulatory approval. Some press releases need regulatory approval. They need attorney approval. They need board approval. They need the competing companies' approval. It's really, everything's a process. So there's a bit of a backlog to work through. But if it's going to come out, it's going to come out, I would think, before the annual meeting. And I've heard that the company took all those vacations earlier. They intend to work their butts off until the end of the year. So that's all good news for us. And there might be more information. I'm just not sure. That'll be good for January for sure. It is always important to work your butt off in December so you can start with a great January. That leads to a momentum into February and March, and then you have a fantastic first quarter, and you're so full of energy, you knock the ball out of the park in the second quarter, and all of a sudden you have yourself a great year. So they're going to work really hard in December. It's just a stupid price. Giuseppe. Just an observation, probably nothing. Yeah. Steve, I know you're holding your paper silver a little longer, and I think that's fine. But the stock, I don't know what you're looking for. It is so cheap. It is so cheap. I'll just give you my case. If you sold your paper silver tomorrow, or some of it, you don't have to sell all of it, just whatever, and you bought Real-Town, I don't know, 29 cents, maybe 30 cents, but call it 29 cents. Silver's 60, and I think silver, I've got it written down here, I think it's going to 120 before the market, we have a correction in the market. Now, one thing that could happen with silver is it could become unobtainable. And if a bank goes down, it might be Bank of America, but it could be JP Morgan. Anyway, and you could get a panic, and you could get a squeeze in silver out of the blue. But assuming they have it under control, that means your paper silver will double, which I congratulate you on owning it. Let's say by the first quarter at the earliest. I think this market's going to zoom up very quickly. Will it be the first quarter? I hope we have another year, frankly, but it could be 6 months, 9 months. But then once the Dow reaches maybe 70,000, NASDAQ reaches maybe 40,000, the S&P maybe goes to 10,000. I think the market, we could be in for one of the scariest things any of us have ever seen, and a correction that is breathtaking. And in that time frame, silver could come down. David Hunter thinks silver could go back to, I'm approximating, I don't remember his exact number, but it could come back to $32. I don't think so. Now that silver's through $52, I think that's where it pulls back. and maybe goes a little bit further. So maybe silver would pull back, even in all that devastation. Silver might pull back to maybe 45, 48. But David Hunter thinks, to my memory, he thinks it could go back, 28, 30, $32 briefly. But then after that, he's got, if I'm remembering, he's got a target of $500 on silver. But that's 2-3 years out. So if you, let's say you sold, I don't know, whatever, I can't create a scenario in my mind. But if you sold silver, your paper silver, you bought Railtown at $2.90 or $3.30 tomorrow, I think you could see Railtown in the first quarter, $3, 10x. Now, Tony Tiptoe's not going to agree with that. He's going to tell you it's going to take 18 months. But he doesn't know what he's talking about. Doesn't mean he'll be wrong. He could be right. I mean, obviously, I think I know something, and I've been wrong all year. So, anyway, if Railtown gave you 10x by, let's say, February 15th, which I think is entirely possible, and silver did double, well, you could sell, you could sell 4x of that Railtown, 40% of that position of Railtown, and buy back the silver at the higher price if you really wanted to, and come out ahead with the 60% of Railtown for free. You'd be back in your silver. But I think I really wanted to establish a position in silver for the last 2 years, and unfortunately the money never came. I think getting into silver at $60 for it to go to 100 or 120, it's not the easiest call to make, because I think it's highly manipulated, and it's fighting the same system that we're fighting in these stocks. And if the market breaks down for any reason sooner than is expected, silver could be back down. The only risk you have is that silver does a breakout in that short window, but it becomes I'm so less certain of that call. I wanted to pair it with another investment, but that's when silver was $28, $30, $32. Well, it's doubled. That's exactly what I thought it would do. Put a matching investment in silver versus the other, and then when silver doubled, either hold it or sell it, but you could at least take half out and pay for the original investment and the other investment. Now, to do that, you need silver to go to 120. I'm not sure it's going to. It probably will. I'm calling for it, but it's just much more volatile, and it has a little less certainty. I would have said from $30 silver, 90%, we're going to go break those highs. But now at 60 something, I'd say that it goes to 100 or 150, 70%, 65%. Well, we'll find out. It's just more risk. In the long run, there's nothing better to own than silver. But paper silver, not so much. But we'll see what happens. So anyway, it gives you a way of I think adding some Railtown for free. But if silver were to go to 100 or 120 by March, and Railtown went to what, $5 by March, you could sell part of your Railtown and get back to silver and have a bunch of Railtown for free. But I'm not sure I'd recommend to buy silver at 100 or 120 because I do. It's very volatile, and I do think in the long run, my view is silver is going to be thousands of dollars an ounce. But as a short term, as a trade, I think it'll get cheaper when the market corrects. Of course, the market might never correct. Anyway, it's a lot to think about. Ward Richardson, Giuseppe, it's very clear that there's a lot going on behind the scenes at RT, and this is a good thing. I agree with that. And I'm pretty impressed with Ward and Neil and other people. You guys have a good sense of it. Neil, Microsoft today in Canada is investing. Ward Richardson, William, I'm sure a lot of things will come to light on December 17th. It's 2 days before Atlas 3.1 is at the closest point to Earth. Neil Gondek, MSF today, Canada announced $17 billion investment in AI cloud. Railtown AI should be able to get projects to fund additional development to be the one-stop shop. Yeah, I have that feeling too, Neil. I have that feeling too. Anyway, I like that. That's awesome. And then 19 billion for AI infrastructure in Canada for the next 3 years. It's awesome. It's awesome. It's awesome. Thank you, Neil. Taway Ruru. Please talk about CRTD. Why? Let me look. Let me look at CRTD. There isn't such a thing. Is it vocal? There's no vocal. Did it go out of business? Did they change their name? I don't know, Taway. CRTD might not exist anymore. Or it changed its name. Or it was bought out. Well, actually, it shows up on the stock chart, and it's trading for 63 cents. The chart is doing interesting things. I'll try to print out a chart and talk about the chart tomorrow, but I'd be really careful. On the other hand, you've waited this long, might as well wait to see what happens. But if you look at a 5-year chart, you can see what CRTD's done. I don't know why it didn't come up on. Maybe I mistyped. Let me see if there's news recently. I mean, it's still destroyed compared to where it was. The news is reported earnings per share up 75% year over year. Net equity surpasses 9 million. Created engages Dawson James Securities and Lukowski Brookman LLP to execute an uplisting strategy, reverse split coming. They had an investor conference call, launched Flight Escapes, an AI enhanced luxury travel experience for the modern era. They're approved to trade on the OTCQB venture market with nearly 10 million in positive net equity. Wonder how long that'll last. Created Flight positions for strategic expansion following Verijet bankruptcy. That Verijet sounds familiar. Created swings to 6.4 million positive net equity, 32 million turnaround in 18 months, set stage for uplist. Blue Gold adds veteran Wall Street financer and fintech innovator Jeremy Frommer to advisory board to drive tokenized gold strategy. Created Flight AI-driven platform advances new empty legs offering. Created closes 2.3 million multi-company investment. They completed an audit 5 months ago. I guess they're getting out of the content business. They acquire Air Charter Advisors. They're launching an AI-powered travel booking platform. They bought something for 8.3 million. Well, I hope they don't do any deals with Jeff Easton. But he's got a hard head. He doesn't believe there's any shorting. The market cap is 7 million. It's a nice increase from a year ago. There's no financial highlights. Stock's been as high as 135. They've got independent directors, good transfer agent. Their profile is verified. It's all good. They have outstanding shares of 14 million. They have authorized shares of 3 billion. So, if he goes back to Jeff Easton, you better get out. But it looks like he's not going to do that. And it looks like he's done some financial engineering here successfully. And, if you really think it's a place to be. But where's it trading? 63 cents. Do you realize you could almost buy 2 shares of Railtown for 1 share of Created? Not quite. 1.5 shares. And I think it's a safer bet, but looks like he's done a good job cleaning it up. Jeremy Frommer says he fixed the company. Well, maybe he did. I mean, it's going in the right way. As long as he doesn't do a deal with Jeff Easton. But, you're still 500 to 1 down. It's a long way back up. If you want to make money back on it, and I'm not suggesting that you try to, you got to add money down here, or maybe you already did. You got to average down because it's a long way back to break even. So you've got to average down your position. And all right, let me show this chart because that gentleman said I was going to avoid it. I don't mean to avoid it. Nothing's coming up. I might not be able to do it. Oh, here. Is that it? I can add that one. And I could add this one. I hope my service still works. I have to pay for it. I think I'm in a grace period. So here's the chart that I showed you yesterday. And the yellow line is very fat right here. This yellow line is quite fat. But at the top of it could be support. If you look back to May, support could be a little higher. We might already be in support. But anyway, I tried to draw it through that, taking the low of the middle of May with kind of the high of March, April, just through the thick of all that. And that gives me this target right here, 27.50. And today it got pretty close to that. This is yesterday's chart. But then down here, if you see over here on this side, for March, April, I guess twice in March and twice in April, the stock came down and kind of bounced off a level. That lowest level of which, ignoring that one little tiny spike, is 25 cents. right here, 25 cents. That's the number, maybe 24, but I think 25 cents. So I don't see it going to 20 cents. I think 27.50, they're going to make that happen tomorrow if they can. But I think 25 cents would be as low as it's going to go before there's a bounce back. But here, if you look on May 19th, just to go with what Pete was saying, there was one day where it spiked downward. And I have no idea what that price is. So if you put an order in to buy at 20 cents and it went through your order on that one day, you might get it. But overall, I don't think 20 cents is the number. I think 27.50 is it. And then it'll bounce and maybe come back. But I think anyway, I think the lowest it'll go is 27.50, but anything can happen. And then I think 25 might be it if they try to go further. I think it came down here and tested 25 1, 2, 3, 4 times. I don't think it's going to break through 25 without testing it again and going sideways like it did here. But obviously, you see the one in the middle. On any one day, it can spike down, but you don't know what the volume was that day on the downward part. There's no way to tell. And here's the chart. Okay, this gentleman sent me this chart, and this goes with Pete's target of 20 cents, which it didn't hit. That spike is not 20 cents right there. I don't know what it is, but it's not 20. But it would have to make new lows to get to 20 cents. Anything's possible. I mean, that chart, on the one hand, looks terrible. On the other hand, it looks like it's gone as far as it can. And on a third hand, I can almost see a wedge there. Almost. If you ignore this spike above 60 cents and you just take it up to around 55 cents and down, you can see a wedge there, which is very bullish. Very bullish. But it's not a clear-cut one, so I'll have to print out a chart if I can or draw one. But if there's a wedge there, that's a good sign. So this morning, they opened this trade. It's a weird time. It's like last night, time in sales. But the first trade this morning was 7,000 shares at the bid, just have to get out. Now, that might have been real. That might have been, I just want out. On the other hand, it's kind of a weird thing to do, just hit the bid. Why not work the trade? And then at that same time, the bid was over the price and the ask was over it. And then you'll see this, I took this at the same time. You'll see that the volume is 23,000, even though there was only 7,000 shares traded. And the low, I guess the low was that price. All right, and then later in the day, you've got the 7,000, 29.49, and then the only other trades you have are 100 and 100. Yet, when you look up here, it shows volume of 23,000. It's all manipulated. It's just all such a nightmare. It's just all such a nightmare. And there was some news at TELUS today. It's always important to go through news from TELUS. Very important. Today's news, December 9th, at TELUS Digital Philippines, promoting open discussions about mental health and recognizing early signs of distress are essential to fostering safe and supportive tech-driven workplace. Prioritizing overall well-being is a key component of TELUS Digital's corporate strategy. Its commitment to employee wellness reinforces a people-first culture that drives innovation and enhances customer experiences. Quote, mental well-being is a core part of how we help our team members thrive. We ensure support is accessible all year long, from 24/7 counseling through our employee assistant program to regular mental wellness learning sessions and community building activities across sites. Michelle Trinidad, People and Culture Director at TELUS Digital Philippines, said in an interview. These new community building activities integrate movement, mindfulness, connection, and psychological safety into daily routines, fostering a workplace where every employee feels seen and empowered. Building a supportive, resilient workforce. Complex tech workplaces like TELUS Digital often face unique pressures from customers who expect real-time problem solving and strong analytical skills in daily operations. To address these challenges, the company provides comprehensive mental wellness support through its 24/7 employee assistance program, offering free mental, financial, and legal consultations. Complementing this are HR wellness webinars and employee resource groups, as well as coaching programs that build resilience and psychological safety. Leaders are also trained to recognize early signs of burnout and foster open conversations about well-being. Leaders are equipped to identify signs of distress and promote psychological first aid through targeted sessions that emphasize empathy, awareness, and active listening, Trinidad explained. Do I have to read it all? I don't think so. TELUS Digital also introduced a dedicated mental health learning track led by licensed psychologists. These workshops cover effective communication, self-care practices, and recognizing psychiatric red flags. I think I'm going to leave it at that. But this is something TELUS had to get out today. And it's quite important. And then this I saw, I could only get the headline. forget about TELUS. Quebecor is the best bet in telecom stocks. And I thought, well, maybe there's something there for Railtown. I don't know. But I'm too tired to look it up now. TELUS is raised to a buy at Canaccord Genuity. That's pretty interesting, huh? Maybe Canaccord will get a research on Railtown. Arrow Street Capital Limited Partnership increases its stake in TELUS. They bought 3.4 million shares. Now, I don't know if that's the kind of company that would also buy into Railtown, but it's just what happens. Institutions buy in. All right, 6:51. And I think what I'm going to do, since I'm freezing, is going to sign off. Try to get warm. I'll show you this chart. Isn't there anything positive to show you? Look at big tech spending boom. It's pretty big. It doesn't show signs of stopping. The dark is Alphabet. The blue is something else. Amazon. The gray is Microsoft, and the orange is Meta. We're in front of a lot of money being spent. All right. I won't ask you for a contribution today. I'll leave you alone. It's 6:52. I wish everybody peace. And I'm just checking to see if, yeah, I wish everybody peace, and I wish peace around the world. And soon, and probably for the rest of our experience in Railtown, the material information blockage will be behind us. Research will be in front of us. Revenues will be projected. And we won't have to go through this drudgery. But anyway, thank you for checking in. And as ever, you know I'm not trying to pick on any one person. And hopefully some of you can buy the stock cheaper tomorrow if you want to. But don't be afraid to go ahead and just buy tomorrow at the prices that are available. All right, cheers.